Good morning, everybody. Good morning and welcome. Hey, Rob. How you guys doing? Hopefully everybody's feeling great, slept well, had breakfast, fully hydrated, dancing shoes on, garbled. That's not the way to be. We'll see if we can fix that before the day's over. Good morning and welcome, all lucky 13 of you. Education room, guys, where we just talk about the easy stuff. Try to keep it easy, keep it focused. Don't make it difficult, don't outthink it. Just let your rules be met. That's what we're going to do today. Which is no different than any other day. And just like every other day, hey, good morning, Zorro. Just like every other day, we are going to go to forexfactory.com/calendar. I really do hope that this was one of your morning routines, because today at 8:30 a.m. we had high impact news, 3 different levels of it. And guys, it made the NASDAQ absolutely scream, which was kind of cool, but it made it untradeable. And if the market moves too fast for me to recognize my patterns, guys, it's probably not my best bet to trade into it. So when I saw that news was coming, and I even posted it in the room, guys, I went and scrambled some eggs and had a nice breakfast. What? Can you guys hear me? Joel can hear me? Okay, I just want to make sure. I was like, oh no. Joel can hear me. Pete, Zorro, T, Rob, Marlon, John, Jeffrey. Guys, give me a Y if you can hear me in the room, please. I just want to make sure it's not me. Usually if one of you can hear me, then all of you should be able to hear me, unless there's something going on your end. Okay, so you guys are good. Awesome. I just wanted to make sure. Guys, every morning I check news. Every morning I just take a look, and I want to see, hey, what's going on? What could affect the market? Squeaky sound. Hearing the elevator music, no audio. Okay. I'll reboot. Test, 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 test. All right, guys. I turned up my volume a little bit, turned it on. Is that any better, or should I reboot? Because I can reboot. Usually the volume's pretty good. It is a little better? Okay. Let's see, I'll pull the microphone closer to me as well. Does that help a little more? I hope. My other one is going off the charts. So I'm probably breaking YouTube ears. Garbled here. All right, guys, I'm going to reboot. Put that because I didn't say that yesterday. Sorry, YouTubers. It's weird. Audio's not consistent. And I don't know why. Reconnect. Maybe you guys can hear me. Maybe you can't. I am on my way back. Let me open up the education room. Let me get out this way. Let me do this. Is it better? Does that sound better? I hope that's better. I'm a worrier, guys. I want to make sure you guys can hear everything that I say. That's important. We're back up. Are we good? Pete says yes. Marlon, are you good? Can you hear me? Still no audio? Really? Anybody? Nobody? Joel, you're good. Pete says he's good. Give me some feedback, guys. Let me know. That was for Marlon. I'm talking. Can you guys hear me? We're struggling here. I'm going to change. Turned it off. No studio voice. No audio. Son of a gun. Alright guys, I just changed microphones. Does that help? Can you hear me now? You hear noise. Still hear me? So Troy, you've been good the whole time. Marlon, can't hear the voice. Gino, no audio. Alright guys, let's do this real quick. Just one big answer for me. If you can hear me, give me a Y, because I want to make sure that it's not me. Alright, so it can't be my microphone. Okay, so if you have no audio, go to Task Manager, kill Discord, come back into class. It can't be me if others can hear me. Alright, so hopefully we can get a couple of people doing that and we'll start up and we'll get going again. And then if that's the case, I'm going to go back to making sure that Discord has good microphone. Make sure that we're good there. Alright, I'm going to go back to my normal microphone. We're just going to make sure. Alright guys, so hopefully a couple people jump out, jump back in, and we can get audio. I'm not completely sure why we're having challenges here. Cindy, still no audio? Alright guys, I'm going to kill it one more time. So if you can hear me, you're about to get bumped. If you can't hear me, you have no freaking idea what I'm saying, and hopefully you're following directions. So bye. And then YouTube, I'm going to leave you running, but if this doesn't fix it, we're going to shut you down. Oops, kill that. Hold on, not yet. I want to kill this one too. That's all gone. That's all gone. Dooby 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 doo. Alright guys. Fingers crossed everybody in the wonderful world of let's get this stuff done. Bring it out. We're up. My microphone is on, guys. What do you think? So we got a couple yeses, still scratchy. Rob, you may need to feed the gerbils, brother. Cindy, do you have me? Gino? Troy's got me. Joe's got me. Pete's got me. Well, it definitely is. It definitely is plugged in. I don't know how to plug it in more. Hold on, guys. I'm going under the desk. All right. I even changed ports there. Did that help? Erla's got it. Trace's got it. Jerry's got it. Okay, cool. Maybe my USB port was jacked up. I don't know. I had to Lewinsky it and go under the desk, and good. I'm glad that worked. And I'm loud. It's because you guys made me turn everything up. Here, let me put it back to normal normal levels. There we go. How's that, guys? A little easier on the ears? What a great lesson. Some days things don't go right out of the gates, right? And you can get mad, you can get frustrated, you can yell louder, or you can just fix it. This morning we fixed it. So let's go back. Joel, I'm glad you caught that reference. Guys, news is something that I check every morning. Forexfactory.com/calendar. Let's make sure nothing crazy is going on, because the market can really jump, bump, spike, all those things. Let's see if there was a reaction at 8:30. I want to show you why we check news every day, guys. Because right at 8:30, it doesn't look like there was a huge one on the S&P. NASDAQ absolutely blew through, but 8:30 there was a pretty good spike from fib to fib. It happens, nothing major. But every morning I do it, guys. I don't care what it is. For me, it's knowing that there can be a reaction. And guys, our next big reaction is at 11 a.m. when crude oil inventories come out. Because Monday was a holiday, crude oil inventories is today. A lot of you are used to seeing it on Wednesday. But guys, we also have split volume. I take a lot of pictures, so let me see if I can scroll back to the one that I took this morning. I don't, it's already gone. Guys, we do have split volume today. That's how many pictures I've taken this morning, by the way. They're kind of trying to figure out which one they want to be on. Some people are staying on the old contract, some people are staying on the new contract. And less volume typically means a little less flow, a little less mojo going. So be aware. Just be aware. At 11 o'clock, you're going to want to hang out, relax. Hey, good morning, Sid. Nice to see you. And guys, for those of you that are new, welcome. I'm excited to have you. My name is Mark. I am the younger, better looking Novak brother. And everything that I do in this room, I try to revolve around things being simple. And I try to keep it very basic. And this is a very foundational approach to learning what we do. But each of these pictures is a pretty good representation of what it feels like on day one, day two. And I just want you to mentally prepare yourself for that. You're going to have a lot of questions. Awesome, Marlon. I'm a worrier. I'm a worrier. But that's okay. I do believe in fixing problems. And Marlon, you're new as well. Welcome. Guys, it's going to feel like there's a lot of information coming at you. in the very first couple days. And I promise you, day one, don't put any pressure on yourself to become this super duper trader. By day two, you begin to recognize the language a little bit and absorb some of the lessons. By day three, things really begin to click. And guys, it's not uncommon by the end of the first week to really not only feel comfortable with the language and everything that we're talking about, but even more importantly, it'll begin to make sense. Did everybody lose sound? This is killing me. You want me to wait, Morgan? Never mind. Morgan just had a stroke. Morgan, call 911. We're back on. Guys, I don't know what the challenge is this morning. It may not. You smell burning popcorn. Guys, everything that I talk about comes from the Nexgen page. We have gone to great lengths to make sure that we don't keep secrets from you. The trading guide is where all the answers are. Honest to goodness. So Morgan, if you keep crashing, when you go through and do your documents and everything and you go to delete the recovery workspace, kill this bad boy too. Or just start over. That's a great way to do it too. Guys, everything that I talk about is on the Nexgen page. All the rules that I discuss are on the Nexgen page. The cool thing is all of the terminology that we use is on the Nexgen page. Where the heck is... There it is. There's a whole common term section. And if you come down, that glossary of common terms, guys, is all right here. And these are things that you're going to hear in the room all day long. But the one thing that I focus on for an entire hour, which seems excessive, but the reality is I focus on it for about 252 hours every year and say the exact same thing, is where we talk about a high probability trend trade. And this is our first hour every day, guys, as we're laying down this foundation. If you're brand new with me, we're going to talk about this high probability trend trade when each indicator on every chart agrees with the rules for the trade. And we do this because this is a trade that typically wins 70 to 80% of the time when you follow the rules. Guys, this is a trade that because of that win percentage, it creates confidence through the memory of success. But the most important thing that this high probability trend trade does for you, and it does it for everybody, is it teaches you to read your charts, guys. It teaches you to open up your workspace, to look at the charts, and to understand whether or not you have the advantages that you need to take a trade. Chart reading, and I'm going to encourage you, become a chart reader before you try to be a day trader, because chart reading is about 90% of the overall process. Chart reading is about 90% of your day. And the actual trading is about the other 10%. So to put that in perspective, if you sit in front of your computer for 6 hours today, you're likely to be in the market maybe 36 minutes of that 6 hours. So if you're a stock trader, that's kind of foreign to you. That doesn't seem like a lot of time to make any money, but you'll be surprised. Once you're good at reading your charts, once you understand a couple basic concepts that I'm going to throw out this morning, you're going to get really good at determining where the market is likely to continue. And we're going to use this likely to continue point as the entry for the highest probability trend trade for the brand new user. You're going to understand where the market is likely to go. This is going to help you make good decisions on taking profits. And then you're going to understand where the market is likely to stop. And not only will this help you get paid at the right spots, but it's going to keep you from taking that next trade into these trouble spots, guys. And we're going to focus on all of this. And we're going to do it on this high probability trend trade because the high probability trend trade only has 3 rules. And for a brand new user, this makes it a little easier. You're not focusing on the trade, ladies and gentlemen. What you're going to focus on, and what I want you talking out loud each and every day, is, are these advantages present? Do you have momentum? And that's going to come from rule number 1. And do you have a clear path? And that's going to come from rule number 2. And did you have an entry area? And that's where rule number 3 comes in. And rule number 3 is specific to the high probability trend trade. But momentum and a clear path, guys, these are the two that I want you to focus on. So JK, Tracy, Sid, Marlon, as you come into Nexgen here and you really start looking at what we're doing, I want you to give momentum and a clear path a little extra study time. I want you to ask me a million questions if you don't understand, because once you understand these two concepts, guys, you have everything that you need for a consistent, profitable plan. Once you understand clear path and momentum, guys, it opens up the doors for the rest of the trades that we take. So we're going to take these three rules. I'm going to break them down individually. I'm going to show you what they look like, what they mean, how they affect your trading day, and I'm even going to teach you how to study them so that you get good at them. We're going to keep these three rules on two charts, guys. Simplicity. Can't stress that enough. I am a habitual overthinker. Two charts keeps me from doing that. Three rules keeps me from doing that, guys. And the cool thing is you're going to get 66% of your advantages from the most current bar on the large chart. Your large chart will define the direction of the market, whether you should be looking for rules to be met for long trades or short trades. The large chart will define the momentum in the market, and that's through rule number 1, using those T3 trigger lines to understand when the advantage is present. And then finally, the large chart's going to define the areas where decisions are made, the areas that may stop the market, the areas that need to break before you take the next trade, guys. Rules 1 and 2 happen on the large chart. The large chart leads the way because the large chart's a very broad stroke of a brush. It's a very slow-moving chart. It's difficult to see change on the large chart, which is great because it keeps you focused on the overall advantage. Once these two rules are met, once momentum and the clear path is there, guys, you're going to turn your attention to a smaller, faster chart. Inside of this one bar on the large chart, you're going to see all the fluctuations on the small chart, all the price action within that bar, and there's typically 20 to 30 bars on the small chart. By using that refinement chart, guys, you're going to pinpoint where the market is most likely to continue. On your large chart, it looks like one of these tails form. Guys, this tail is an entire pullback and an entire push up. You're going to be able to pinpoint where this tail is most likely to form by using the small chart. Tracy, you're pretty sure your entry changes the direction? So Tracy, I want you to do me a favor. I want you to take a picture of your entry that changed the direction, and then when we get to the second half of this hour, I want to talk about those three concepts. I want to talk about momentum, clear path, and I want to talk about entry. And very often when you believe you have the power to stop the market, to reverse it, this rule number 2 wasn't met. So it'd be fun to take a look at that. And guys, that's kind of a big deal. Post in the room. Post in the room. Don't sit at home thinking the market hates you. Let's take a look at it. Let's see what happens, guys. So we have 3 rules on 2 charts, and one of the reasons that we use these 2 charts, these sizes, are because the large crowd, the large chart is a reflection of the large crowd opinions. The large chart gives you the idea of what the big groups, the institutional traders, the men and women with more money and charisma than you or I, and what they do is they create trends and they establish momentum and they react at key areas. And the easiest path is to just trade with the large crowd, guys. Don't fight the large crowd. They're just going to run you over and break your heart. But there is a small crowd. This is how I like to look at the small chart, guys. The small crowd loves to fight the large crowd. And they typically can create a pretty good shove against the large crowd, but they fail like 70 to 80% of the time, whether it's intentionally or whether it's on accident, but the failure rate tends to be about 70 to 80%. We're going to use rule number 3 in that refinement chart to pinpoint exactly where that small crowd is most likely to fail, and this will become your entry for the highest probability trend trade, guys. So we're going to keep it pretty focused, and we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. We're going to break them down individually. We're going to talk about the advantages. I'm going to teach you how to study them. And then we're going to piece them together to create a trade, guys. Simulate, practice. So Tracy, as you practice and you're getting to where you want to be, that's only half of it. The other half, and the first step in becoming a confident trader, guys, becoming a great chart reader, is post in the room. Post a picture of what you did in the room. Tell me what you did. Tell me what you saw. And what happens is that is a private session with me. Once that picture comes in the room, I'm going to click on it. And I'm going to say, all right, Pete, what did you do? And Pete's going to say, well, Mark, I had momentum and everything said down. And I used a refinement chart to pinpoint my entry. And I knew where the market was likely to go. And that's where I got paid. And guys, this is what we're about to talk about for the next hour. Pete, absolutely freaking amazing. Look at that exit right before the bounce. He knew where the market was likely to continue, used it for an entry. He knew where the market was likely to go, used it for a profit, and since he knew that the market was likely to stop, chose not to re-enter. Gosh, Pete, you get the microphone tomorrow. The guys, Pete has done exactly what I'm asking you to do. Post in the room, tell me what you saw, tell me why you did it, and let's talk about it and see if there's a way to do it better, or maybe you just need a virtual high five and a gold star and you know that you're on the right path, guys. We're going to simplify. We're going to talk about the high probability trend trade. I'm going to break it down. You have to begin to learn what looks you're going to commit to, guys. Not only the rules individually, but also the overall look. You have to learn the Fibonacci and trigger line looks so that it's easy. Because what happens is in the beginning, guys, anyone else feel like the market moves Mach 5? It is so fast and so difficult to keep up with it. But I promise you, if you go through the process of learning the looks, you're going to be amazed at how much the market slows down. And the easiest way to do that is to use the spreadsheet. And I give this spreadsheet out every day, and I typically give it out 3 or 4 times a day. I'll drop it in the room right now. The spreadsheet is a trade journal first and foremost. The first tab on the spreadsheet is where you're going to put all of your trades that you take into it. You're going to put the pictures, what happened, and most importantly, the notes. You're going to get the feedback from the room, because if there happened to be a challenge, you can go back and you can say, all right, what worked and what didn't work, right? Momentum typically works. Clear path typically works. And if you alleviate one of those, it's going to fall into the what didn't work. And guys, I'll tell you, in my own personal experience, I made a lot of mistakes that I didn't realize I was making in the beginning. And it wasn't until I started participating in the class, my brother taught the class back then, that I started to find the things that were stealing my advantages and begin to recognize them, and then most importantly begin to avoid them. And that's what, going back and study yesterday's trades, guys, it's going to pay huge dividends, and it's going to set you up for the day, and it will accelerate the learning. So if you're posting in the room, if you're studying the looks, if you're learning the looks, if you're working on utilizing the feedback, guys, you're going to get to where you want to be. The second tab, those 3 rules broken down, it's all in the green sections. Strong triggers provides the advantage of momentum. It's imperative that you know what that looks like. But I also think it's equally important to understand that weak triggers. What does it look like when my advantage is gone, right? So I'm looking for this, and I'm avoiding this. I'm looking for a clear path, and I'm avoiding a termination condition. And this is exactly what my entry looks like, guys. And this is one of the ways you're going to get to where you want to be faster. And it's not taking trades as much as it's going back historically, taking pictures. And I'm going to give you something to help you with that. There's a section called favorite looks. This high probability trend trade that I talk about is only the first trade. There's so many other ways to make money in the market. You should start taking pictures of high probability trend trades. So what happens is you know exactly what it looks like before it ever happens. You know exactly what you're waiting for before you ever have to pull the trigger. And then you're going to have to manage it, and you can work on your management plan. And one of the amazing things that happens is once momentum becomes second nature, once that clear path becomes easy, once you understand what you're looking for on an entry, guys, you're going to begin to see the patterns that open the door to the next trade, to the better trade, to the bigger trade, whatever you want to call it. You should start taking pictures of those patterns, and eventually you'll work them into your trading plan. I've done exactly that on the client trade section. The client trade section, I mean, initially, this is your high probability trend trade entry short and long. Exactly what happens from start to finish to pinpoint exactly where the market is most likely to continue. All of these green sections, almost 400 pictures of Nexgen users taking advantage of momentum, embracing the clear path, pinpointing entries. And that's all right here. Guys, management, patterns that repeat themselves. I've just kind of filled out my section to look like what yours should. Morgan, are you having a challenge? The template you're trying to load has one data series saved, but you have two data series configured on your current chart. Let me guess, crude oil, and you only rolled one of them. Is that possible? NASDAQ? I'm not sure, man. That might be a Jason question. I've never seen that. That's a weird one. And guys, just a heads up for you guys that are new, I'm not a very techie guy, but I've broken everything at least twice, so sometimes I know the fix. That's a weird one. That's a new message for me, Morgan. I would close down the workspace. Are you trying to build workspaces? Are you trying to add a template? Trying to add indicators? Oh, hold on. You've got John Novak's overlay on there, right? So you've already got market flow on there. You were trying to go back to 132. So this is your 13.2. So you're trying to go back and you're trying to drop the market flow chart. So what happens, Morgan, is the way John set this up with the market flow overlay and everything, it's got too much information. Build a new 13.2 chart that doesn't have that overlay, and that should alleviate the problem. Because that's a pretty special chart that John built with a lot of tweaks, and it's not going to let you untweak it. Cool. Yeah, just build a new 13.2. Told you guys, sometimes I can be smart. So let me review what's about to happen. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade, guys. We're going to break them down. I'm going to teach you to study them. I'm going to show you how to study them. I'm going to show you how to study them individually as well as to study this trade, guys. I'm going to give you everything that you need by 10:30 a.m. Eastern to be successful with the software. I'm going to give you rules. I'm going to give you a plan. I'm going to give you the ability to study. And I'm going to pledge to you 15 hours every week of live feedback. And the only thing you have to do is post in the room and tell me what you see. What I need you to do is practice. Practice wrong. Break rules in the beginning inadvertently because you're learning. That's okay. How could you possibly follow every rule in the very beginning? But eventually, your goal should be to where you only follow rules, to where the only thing that gets you into a trade is having those advantages, and then you'll trade. And when those advantages go away as a brand new user, it's okay to sit on your hands. Remember, 90%. I am going to beg you on bended knee, keep it simple. Keep it simple, guys. This is a marathon, and I know that you want to know everything right out of the gates. Learn one thing, learn how to do it really well, and then add the next thing, and it just makes it so much easier. So, amen, Marlon. And when you see the plan that I give you, it is not surprisingly named the KISS plan. But I'm not allowed to call you stupid because we just met, so I'm going to call you Sunshine instead. That's what the last S stands for in this room. HR, you know how that is. Guys, 3 rules. So let's talk about the first one. The first rule, large chart, says that I must have strong trigger lines, guys. Why? Because it provides the advantage of momentum. What's it look like? Well, let's talk trend first. This is, Nexgen uses a lot of color coding to make life easy on you. If the background on your large chart is green, the market's going up, the trend is up, we're looking for rules to be met for high probability trend trades long. If The background on your large chart is red. The trend is down. We're looking for rules to be met for high probability trend trade short. Notice I didn't say we're going long. We're going short. We're looking for rules to be met in the direction of the trend. And the first rule is strong triggers. And guys, strong triggers means that these small triggers break above and away from your large triggers. And that the space in between the two looks like scissors that have opened, lets me know that the odds are favorable for the market to continue up. And when those scissors open to the downside, the smalls are below the large, both are wide, angled in the direction of the trend. That gap between the two lets me know that the odds are favorable for the market to continue down. So you brand new users are going to hear odds favorable momentum in this room all the time. You're going to see charts annotated with OFM because really we don't want to type that much. It hurts the carpal tunnel. Odds favorable momentum can push a market in the direction of the trend. Odds favorable momentum can break key Fibonacci areas. And odds favorable momentum, God love it, can cover some of the mistakes that we tend to make as new users, guys. Momentum is the first rule for a reason. And what you're going to find, and this isn't part of the rule is smalls above large and space. Smalls below large and space. But I'm going to give you a little insider tip, guys. If the small triggers and the large triggers aren't the same color as your background, you don't have strong triggers. And if the small triggers and the large triggers are not the same color as the background, guess what? You don't have strong triggers. And if they're not the same color as each other, you don't have strong triggers. It's almost too easy. So strong triggers, guys, leads the way, gives the push, can break the areas, covers mistakes. I love it. Don't want to give it up. But I have to know the opposite side of the coin. When the small triggers work inside of the large triggers, when the scissors close, guys, this is a weakness. This is a visual. Hey, your trend is slowing down. And when I have those weak triggers, anything can happen up or down. It can retrace. The market could bounce. And when it happens at key Fibonacci areas, it's even more likely to bounce. And guys, I got a Ninja Trader crash. I am going to open that back up so we can go see some real world examples. I did a lot of drawing on my charts this morning. That's probably what did it. But I'm going to get logged in. And guys, strong triggers. It's one look. It's the easy look. And if I'm going to go to my 101 section here, it's a consistent look. It doesn't matter what chart you're on. It doesn't matter what time frame you're on. Separation means strength. Separation means strength. Is everybody good with that? New users, this is going to be the easiest lesson that you get is strength and triggers. And whether it's a large chart, whether it's a small chart, whether it's a range chart, whether it's a day chart, if you have triggers on it, that separation lets you know that it's strong, and those closed scissors tell you it's weak. So when we have strong triggers, guys, when that momentum is present, when the market is likely to continue in the direction of the trend, it's imperative that we have room to our profit targets. We want that clear path. And the clear path is achieved by not trading into what we call a termination condition. And a termination condition is that likely to stop the market area. And termination conditions are nothing more than Fibonacci-based indicators that may reverse the market, guys. And it's a comparison of the T3 trigger lines and that area that's going to let you know whether it has the potential to reverse, whether it has the potential to break, or whether it's already broken. We're going to use those trigger lines. But these are the areas, and I put this in the room every day. You don't have to know how divergence forms, but every time you see a divergence high line, this magenta line, this horizontal magenta line, ladies and gentlemen, there was a loss of momentum right at this pivot. The sellers stole the momentum from the buyers and pushed the market down. All it is a loss of momentum. You'll also see it at a low. It's a cyan line. If the sellers were in control and the buyers not only steal their momentum but push the market the other direction, you're going to see a cyan line. You're going to see Fibonacci resistance, red Fibonacci resistance, guys. And what that tells you is that when the market is trending up, I'm opening my workspaces back up, sorry. When the market is trending up, This is an area that may stop the market, that may reverse the market. This is an area that may create an untradeable bounce. This is an area where the large crowd might make decisions, guys. And Fibonacci support is the exact same thing going the opposite direction. If price is going down, you reach Fibonacci support, it may create a bounce. It may like offset a fight. It may reverse the market completely. And the reality is, and this is one of the things that I really want you guys to take to heart, you'll never know. You'll never know what the market's going to do, but through these three rules, you'll be able to have an idea of what it does more than it doesn't, guys. And we're going to lean towards those advantages to find a trade. We're also going to use these yellow 1-to-1s. They may behave as resistance on the way up, and they may behave as support on the way down. So it's these areas on a large chart where decisions are being made by the large crowd. It's these areas on the large chart that price must reach to kick off that decision making, guys. So if the market's moving up, the buyers are in control, everything is green, and it reaches Fibonacci resistance, and it reaches a divergence high, and it reaches yellow 1-to-1s, the only thing you have to do is ask yourself, where are my triggers? And guys, if the triggers remain below Fibonacci resistance, this is an area that may reverse the market. Notice that I use the word may, potential, could, might very often because I'll never know. But I do know that when price reaches Fibonacci resistance and my triggers are below, more often than not, it creates at the minimum an untradeable bounce. So rule number 2 isn't met. The path isn't clear. I'm not taking trades into that Fibonacci resistance. Sellers take over, everything's cranking down. They reach Fibonacci support. They reach a divergence low. They reach a yellow 1-to-1. And when price reaches that area, once again I ask myself, where are my trigger lines? And if they remain above support, and guys, they're gonna be every time you hit a line, this is an area that may stop the market. This is an area that could create an untradeable bounce. This is an area where decisions are likely to be made, and that's why we choose not to trade into these areas, because more often than not, they're gonna ruin your good time, guys. So price reaches resistance, triggers below, sit on your hands. Price reaches support, triggers above, sit on your hands. If resistance reverses the market or support reverses the market, this is what we lovingly refer to as a strong top or bottom. And a strong top or bottom means that the decisions made at the key area were so impactful by the opposing force that not only did they reverse the market, if they set you up for your trend trade, that's the highest probability trade you can take. That is the best of the best when you start looking for trades coming from those key areas. So is everybody cool? Price reaches an area. Where are my triggers? Just for grins, let's go to crude oil. Price reached Fibonacci support, untradeable bounce. They tried again. Market reverses. Price reaches resistance, untradeable bounce. They try again, right to the next level. There's your reversal. There's your bounce. There's your bounce. There's your bounce. Son of a gun, how effective can Fibonacci be? So right now, Tracy, Sid, Marlon, who else is new in here? I want you to burn this picture into your mind. Why don't we trade into areas? Because areas can stop the market, guys. And in the last 8 hours, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times the market stopped cold at these key areas. One time where the area broke. I like my chances of not trading into the area. That was a good look. So guys, understand termination conditions. It's going to keep you safe. It's going to keep you out of trouble. It's going to keep you from making impulse decisions trading into areas that may stop the market. And I'm going to tell you, areas break all the time. If they didn't, we'd be caught in a range for the rest of our lives. An area is considered broken. Support is considered broken when both the small and the large triggers get below the area of support. It begins to behave as resistance. But the trigger lines, getting below the line, define whether or not it's broken. It has nothing to do with the color of the fib. It has everything to do with the trigger line location. So price reaches, sit on your hands, do nothing. I don't know if it's going to break or not. Small and large get below. Heck yeah, rules are met. Let's look for rules to be met for high probability trend trade short until the next area is reached. My path is clear. Everything's going up. Price reaches Fibonacci resistance. My triggers are 3 days below. I'm not going to take that trade. I'm okay missing out if it keeps up. Once the small and the large get above resistance, resistance behaves as support, guys. My area is cleared. My path is clear, and it remains clear until you reach the next area. Is everybody comfortable with this pretty simple process, guys? Let it reach the area. Look at that. If the triggers haven't broken, sit on your hands. To the tick, ladies and gentlemen. I can't make this stuff up. This is real. And if the small and the large get below, let's look for opportunity. And what you're going to find, look at that, weak triggers, retracement, right into resistance. Guys, even with odds favorable momentum, absolutely no longs into this area for the brand new user. It may stop the market. It may reverse the market. And because it wasn't one of those cool, strong bottoms, this area is even more likely to hold. So we're gonna wait a minute. We're gonna see what happens here. And I want you to realize that, remember, we're talking about the best of the best, the first trade, the most awesome look, either broken or not. This opens doors to use your chart reading to create a little recognition, guys. When 50% of your triggers break through an area and 50% are lagging behind, if you have odds favorable momentum, guys, this area has the potential to break. This area has the potential, because of momentum, to break. Small triggers smash through, large triggers lag behind. We call this a 50-50 trade. How clever is that? A 50-50 trade is not a clear path because it's only the potential to break. A 50-50 trade will be the second trade that I give you a plan. It seems like it, doesn't it, Tracy? It seems like it. Check this out. No triggers, no trade. Both triggers trade away till you reach the next area. Potential to break, guys. These are the three options at every Fibonacci area. This one is high probability. This one's what we call medium probability. It's not as sweet as the clear path. I'm going to give you a plan for this one. And then Tracy, I made this slide just for you. What timely stuff, guys. There will be times when your path isn't clear because the areas are stacked a bit. It happens, Tracy. It really does. Here's the cool thing, though. The majority of your trades are going to be this potential to break before you hit that next area. But there will be times when there just isn't enough room. Guys, this is 90% of your day. You guys, did everybody hear me when I said 90% of your day? 5 hours and 24 minutes of every 6 hours is not doing a damn thing. That's frustrating for a lot of people. But guys, the futures markets trade billions of dollars every day. Billions of dollars every day. Tracy, you only need to find $400 a day consistently to be in a six-figure income based off of your trading. So when it hits support and another support and another support, just say, who cares? Not my money. That's not my advantage. I don't have to be in this move because I promise you there's going to be a move. There will be another move, guys. And very often, respecting these lines, guys, it gives you the ability to see where the in-charge forces, the driving forces, are likely to make reaction. And the cool thing is it keeps you out of a lot of consolidation. It keeps you out of a lot of trouble. And if I can go to Exhibit A, guys, 11 instances where rule number 2 kept you out of a market that had struggles. But Tracy, that was a potential moneymaker. And Tracy, this was a potential moneymaker. And I think that Pete actually caught that one. And there may be one setting up right now from that termination condition. And maybe, Tracy, it is. What's your time frame? What hours are you watching? Because everything I do is pre-market for the most part because I have to come in and teach this class, right? So I wake up at about 5-ish Central and I start watching all the way up to 8 a.m. because that's the time frame that I have. 12-hour swing shift. And granted, this was simulator this morning because I'm practicing some new stuff, Tracy. But I'm up almost $1,300 since 5 a.m. So some days it's like an ATM. Some days you have to sit on your hands. Crude oil starts trading at 2 a.m. in the European markets. Gold tends to move really well in the evenings. NASDAQ and the S&P work really well in the afternoons as well as pre-market. There's opportunities almost 24 hours a day, Tracy. And here's one of the big deals is once you are good at these, once you understand these concepts, a lot of people tell me that it's amazing how many opportunities are really present when they thought there were none. People are like, man, I just can't find a trade. And it's like, well, it's because you're not looking for advantages. You're finding all the losers because you're ignoring advantages. And once you understand these three things, it's kind of amazing how many trades just suddenly present themselves. So we'll keep it basic. And if you work a 12-hour shift, you're going to have some days where you're great, and you're going to have some days where it's just not going to be a trading day for you. And that's okay, right? If you're a surfer, not every day is a big wave day. If you're a golfer, every day is not dry and sunny. Some days we have to sit on the sidelines. So I'm going to ask real quick, is everybody cool with momentum? You feel pretty good about it? Separation in the triggers gives me that advantage where the market is likely to continue, guys. First rule, if you know this one, guys, you're a third of the way there. Second rule, clear path. This one takes a little longer because you got to work through that whole where's the price, hold it, no, where are the triggers. Price reaches an area, triggers don't break, sit on your hands. If they break, the path is clear. And guys, this is a magical moment because when this happens, it's time to go look for the entry on that smaller, faster chart. But before we go to entries, there will be one termination condition, just one, that I will respect on a smaller, faster chart. Guys, if my rules are met on the large chart, this is the only thing that'll keep me out of a high probability trend trade. And this is 3 divergences in the same price range. 3 divergences, 3 losses of momentum in the same price range, guys. What it's doing is your small chart is showing you the change that you can't see on the large chart. Your small chart showing you that we're losing enough momentum to potentially turn the market. So 3 divergences from a lower, 3 divergences from a high, guys. This is the only time on the small chart where rule number 2 isn't met. Otherwise, it's go, go, go. Let's find that entry. And guys, the entry is precise. We're going to pinpoint that likely to continue area, and we're going to do it with such accuracy that you will be able to wait at that area. Fibs, midbands, and yellow 1-to-1s, you're going to wait with a limit order. And the whole verbiage is we're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. We're going to use a limit order to pinpoint exactly where the small crowd is most likely to fail because the large chart says up and the large chart has a clear path. Guys, we're going to pinpoint with amazing accuracy where the small crowd is likely to fail. And we're going to do it because they create that little pullback, that little retracement. So we're going to use the limit order to buy or sell a pullback at areas inside of triggers. And for brand new users, we're going to use the phrase favorable large triggers because favorable large triggers gives the smallest window for entry. It gives the least amount of risk. It's the easiest one to pinpoint. And favorable large triggers mean that your large triggers on the small chart and your synthetic triggers on the small chart are overlapping, one on top of the other, 2 snakes riding piggyback, guys. And it's that overlapping that creates a smaller window because One of the things that's true is small chart price may return to the large triggers, the smoother of the two. Large chart price may return to the synthetics. These are the large triggers from the large chart. So the tighter they are on top of one another, the least amount of space there is to put in fibs, midbands, and yellow 1-to-1s, because the triggers are where price may return. The areas inside of triggers are where price may bounce to continue with the trend. The areas inside of triggers are where price may bounce, where the small crowd may fail. And that's where your entry comes from areas inside of triggers. So when the large chart says up, when the large chart has a clear path, when the large chart has everything that you need, momentum, your small chart's going to look like this, guys. And this is a harrowing experience for new users because the fear of missing out is going to kick in full throttle. You're going to say, oh my gosh, they're going without me. This is horrible. I won't get paid. I better jump in. And you're going to jump in because you feel like with momentum and a clear path, how could it possibly turn? And then the small crowd shows up, guys, and this happens a lot. The small crowd creates a reversal bar. The small crowd begins the fight, guys. The reversal bar is not your entry. The reversal bar is actually the beginning of the fight, a loss of momentum that hopefully pulls us to our entry. So this reversal bar is not your entry, but rather the beginning of the pullback. And at the time of the reversal bar, you're going to look for those triggers, large and synthetic, and you're going to say, hey, price may return to the top of these triggers. Price may go all the way down to the bottom of these triggers. I have no idea. I'm not in charge of this market, but I do know that areas, fibs, midbands, and yellow 1-to-1s inside of triggers can create a bounce. So you're going to create what I lovingly call the window of opportunity, guys, the woo. From the highest point of support to the lowest point of support defines the point where the small crowd is most likely to fail. From the highest point of support inside of triggers to the lowest point of support inside of triggers defines exactly where the bounce is most likely to happen. And I'm going to show you this real quick. We'll use different colors because it's fun. So if I get my arrow, the white arrow represents where price may return. From the top of the triggers to the bottom of the triggers, I have absolutely no idea, but this is where it's likely to return. And then we will go, let's go yellow. Yellow, whoops. Well, or white again. Let's go yellow. The yellow arrow shows where the first potential bounce point is to continue in the direction of the trend. The second yellow arrow shows you the second potential bounce point. And I am crashing, there it is, where the market may continue in the direction of the trend. Guys, we're precise, but we're not totally precise because it's a window, because it's a range, and more importantly, because the large chart has momentum and a clear path, your entry is at the highest point of support inside of favorable large triggers, a tick or two above. And I'm going to give one more arrow, and we're going to make it red because red's bad, right? This arrow shows you where the market shouldn't go if this is going to be one of those trades, guys. The red arrow goes beyond those trigger lines. Anything beyond the bottom of the triggers, I call this the wrong side of the triggers. If this is going to be one of those 70 to 80%, guys, the market shouldn't make its way down there. You're actually going to use this concept for stop placement when we get into management. So let's learn the system. Everything says down, the momentum is high, the path is clear. We wait for the small crowd to fight. We wait for the reversal bar. The reversal bar signals the beginning of the pullback. You will get to the point where you just anticipate the pullback and you have your window of opportunity long before that ever happens. Guys, but the reversal bar sets off the beginning. Find your triggers from the bottom to the top. They should be overlapping one on top of the other. Find your areas inside, guys. There's one area, one line. Your limit order goes 2 ticks below that line because that line is the point where the market is most likely to continue. That line is the area where the small crowd is most likely to fail. We're not entering on the reversal bar, we're not entering at the triggers, but rather just below the lowest point of resistance inside of favorable large triggers. Anything on the wrong side of the triggers is where the market shouldn't go. I'm not going to put my limit order up here and just say, well, it could go to a line. I don't want to get run over a little bit. Let me put it there. And guys, I'm not going to put my stop where the market is likely to continue, where the market is likely to go. This area outside of those trigger lines, guys, this is the first step in management, because when you can define where the market is likely to continue, and I think you should spend a couple weeks on this, really get good at this entry. You know exactly where the market shouldn't go. And this is your first stop placement. 4 to 5 ticks above those triggers. 4 to 5 ticks beyond that window of opportunity. 4 to 5 ticks deep, because the market may go a tick or two above, 3 ticks above. But if it's 4 or 5 ticks above, I don't want to be in this trade anymore. I've lost my advantage, because when you get to the wrong side of the triggers, there's no telling where the market may stop. When you get way below these triggers, guys, it could keep going. It could go find a fib off in the distance. It could go find a large sharp midband. So we're going to put our stop where the market shouldn't go. This is your first stop placement. And here's the great thing about the precision, is when you have odds favorable momentum, when you have a clear path, when you take the perfect entry, when your stop makes sense, more often than not, you're going to get a reversal bar in the direction of your trend. And guys, when you get this reversal bar in the direction of the trend, you're actually going to reduce your risk even more. 2 ticks above that reversal bar for a short, 2 ticks below that reversal bar for a long. This reversal bar reduces your risk. It lets you know exactly where to put that stop. And it's not uncommon to see the small crowd put it in high gear after a little bounce. And Nexgen users get stopped out, and they get stopped out for 30 or 40 bucks instead of 300, right? And what happens, guys, is that this is your entry. 20 to 30% of the time, they're going to hit your stop. 20 to 30% of the time, you're going to take a loser. 20 to 30% of the time is what we call a cost of doing business. You can't get upset over losers. It won't serve you well, guys. Make sure you're taking the correct loser. Make sure you're taking the loser that is based on a pattern that is proven to win more than it loses. Because if that's the case, guys, if I take 10 of these trades and I know I'm going to lose 2 or 3 of them, it doesn't affect me mentally. It's just a cost of doing business. And I also know that if I take 10 of these trades, I'm likely to win 7 or 8 of them. So I have to be consistent in my actions. I have to do the same thing every time to assure the statistical advantage. And guys, that is the high probability trend trade. And I'm going a little slow. I know I've got some new names in here. And I want you to see something. Whoop, they never gave a pullback, did they? I want you to see this square right here on my large chart. And I want you to see exactly what it looks like if I scroll back on my small chart. 412. I had a termination that reversed the market. That's a strong bottom. I had the best momentum that I could ever hope for. I got a reversal bar, and it pulled back to the highest point of support. And notice how my triggers aren't favorable, but it still went directly from the line. And guys, I knew taking this trade that my risk would have been all the way down here, and that feels a little excessive, right? And guys, one of the things that we talk about is this is the perfect look. This is the least amount of risk. This is the tightest window. Guys, this is not always the look. I mean, we just saw it. Sometimes those triggers are split a little bit. The crude oil lent itself beautifully for this lesson. Sometimes the market may return to the large triggers, may return to the synthetic triggers, and when they're split and far apart, guys, it creates a little indecision. If there's areas that are split as well, it creates indecision because, guys, remember, Price may return to these triggers. Price may return to these triggers. And my stop has to be below the lowest point of the triggers. Is everybody with me on that? Because this is a very common look when you have momentum, when you have a clear path. It just happens every now and then. If you understand where the market is likely to go, if you understand where it's likely to continue, if you understand where it shouldn't go, you might say to yourself, dang it, that's way too much risk for this trade. I'm not cool with that. But do you guys remember when I said once the market gives you a reversal bar in the direction of your trade from that area, from the area that's inside the window, guys, you can put your stop 2 ticks below it. This is what we call a confirmation bar. This is a reversal bar telling you that the trade is doing everything that you expect it to do with odds favorable momentum and a clear path. And guys, this reversal bar establishes your risk. So your stop isn't down here, it's here. You're going to pay a little for confirmation, but you know exactly where your stop is, guys. And this is pretty amazing when the entry isn't perfect. That's the wrong chart. So I want to go back and I want you to see this. Large chart had momentum. Large chart says up, but there's a little indecision here. It could go anywhere from here to here. But my bounce points are right here, but I'm not going to just jump in because what if it goes down to here? That's a lot of risk. If you waited for the confirmation bar, if you paid for that confirmation right here, you still had 92 to 13, over $200 worth of profit before the market ever even blinked. And I want you to see something. Oops. Let's get everything off this chart so I don't crash it. This is going to be a study tool. If I circle this tail, it lines up right with support, right at those triggers. Hold on, let me circle this tail. It lines up right with support, right at those triggers. Guys, this is how you're going to be able to study. This market had the potential to break. Let's circle that tail, and just for poops and giggles, right at support, right at the bottom of the triggers. 4 to 5 ticks kept you in. And guys, I'm telling you, this is what we're doing every day. When it's not perfect, it's okay to use a confirmation bar. And guys, you're going to circle those tails historically. Tracy, Sid, JK, Marlon, guys, I want you to go back on your large chart and I want you to circle tails. And if they line up with areas inside of triggers, guess what? That's your pattern. Go take 20 or 30 pictures. You'll never miss it when it happens live once you commit it to memory. Once momentum is easy, guys, focus on whether or not areas are broken. Once that becomes pretty simple, get your pattern down. And guys, that's the first hour, every hour. And remember, it's only the potential to break. And Pete's absolutely right. Establish your risk. Know what you're getting into. The methodology gives you the ability to do that. Let's go see what that one looked like. What a great study tool. So look at this. There's those split triggers again. I don't know if it's going to go to the large or the synthetic. I don't know if it's going to bounce off of a fib or a midband. Hell, I just don't know. If I take the reversal bar, it comes down, and it might have gotten me. But guys, it's still the trade. If I take the second reversal bar, it makes up for my losses, and this thing didn't stop. You may have to take trades twice, especially when it's not perfect, guys. And what happens inside of this one bar, one more thing for you new users to see. When the large chart said down with strength and potential to break, all of this happens inside of that one bar. Don't let small chart fluctuations freak you out, but rather use that small chart to pinpoint where the market is most likely to continue. And guys, is it just me, or did it return to the synthetics? We knew it could have been either, and it made it to the synthetics before it started down. It just happens. So, this is where I start giving away gifts. The first one's what I call Chart Reading 101. And I'll tell you right now, guys, it's fun to be in all the trades. It's fun to get into the market. It's fun to get out of the market. The adrenaline rush is pretty kick-ass. But to get to where you want to be, you got to be able to recognize some looks and patterns. And you got to be able to do it fast. And this is going to reinforce the lessons that we just gave, guys. This is going to speed up the process to becoming a chart reader. And I said it earlier, and I'm just going to say it again. The fastest way to get to where you want to be isn't taking trades, but rather it's taking pictures of what it means to have rules met to get into the trade, guys. So I am going to encourage you, but I can't force you, to take 25 pictures of strong triggers and weak triggers and know the difference. Take 25 pictures of a clear path and a termination condition and know the difference. Take 20 pictures each of short and long high probability trend trades from areas inside of triggers, guys. We've just seen 2 or 3 of them. That is 140 pictures. Break it up into 5 days. It's okay. But don't just take the pictures. Like, it's one thing to take a picture of strong triggers. It's another thing to talk about why they are strong, to talk about what the advantage is, to talk about what rule it pertains to. And guys, we're filling up this second tab. So let's see. If I click on strong triggers, it better be good because I did it. Strong triggers, because they are wide open, the smalls above the large, rule 1 met, momentum. Does anyone believe that they could take 25 pictures just like that and ever confuse this strong trigger look for these nasty weak triggers, small inside of the large, anything can happen, rule not met scenario? That same look that created a deeper bounce, that same look right off of a termination condition. Guys, this is the most basic form of learning to read the indicators. And once you understand momentum and clear path, guys, there's an entry. There's an entry. There's an exit, potential exit, potential exit. And once the shuffle is over, the momentum comes back. Guys, we're looking to get into the market again. You don't have to be in every move. Learn how to be in the best moves. Pretty cool, right? But Mark, there's not enough rules. There's not enough rules. There's not enough scenarios. You don't have enough indicators. BS. Check it out. Large and small, clear the areas. Haven't reached the next area. The path is clear. When I reach the area, it isn't. And sure enough, there's that big untradeable bounce. Guys, know the difference. And once you're good, once you're solid with strong and clear, with weak and term, it opens the door for that 50-50 trade, for that next trade that's going to keep you busier throughout the day. But make sure that you annotate, guys. Make sure that you write why. And I'm going to give you this to help. Here's pictures of what it means to have rules met, guys. Is the market coming from a strong top or bottom? This isn't mandatory, which is why it's not one of the 3 rules. But when it happens, it creates a scenario where this becomes the highest probability trend trade that you can take. And it is a termination that reverses the market. Here's a picture of strong triggers. Here's a picture of weak triggers. Don't mistake the two, because one gives an advantage and one takes it away. This happens to be a termination condition, and there's why. No triggers through, not broken, no clear path. There's a clear path because the large and small are through. And there's only the potential to break. That's not high probability, but we're going to learn how to capitalize on it. We just got to figure out where the market is most likely to continue. I have to understand where my limit order goes, guys. So I'm giving you this one as well. And then just below, print out the second sheet. Police yourself. Use these words when you annotate a chart. Talk about where it's coming from. Talk about the momentum. Talk about the path. Talk about the areas. Of course I'll check your husband's trade once we get into doing it. And Cindy, please, feel free to do that all the time. If he needs critique but can't be in the classroom, you just post for him. And then that way you have to take the beating, right? Guys, print this out. It's going to pay dividends. And then someone said, KISS, right? Keep it simple. So here's your plan. And guys, this plan is a stepping stone in your learning journey. This plan is the first trade. This plan is the highest probability trade. This is the plan that typically wins more than it loses. This is the plan that teaches you to read your indicators and builds confidence through the memory of success. Wow, that is a bucket list of positives. This plan is designed to optimize your chances of success with the high probability trend trade as a new user while you learn to read your indicators. And then through simulation, study, class feedback, and continuous practice, you will be empowered to create a plan based on your personal goals and your experience reading the indicators. I said that all wrong, guys. But once you can read your charts, once you begin to recognize patterns, you're going to grow outside of this plan. You're going to create your new plan through your ability to read the indicators. But until you can do that, why not follow the best of the best, guys? And I'm going to tell you right now, there are people that are with Nexgen. Of course, they're still with Nexgen because they followed this plan. And they were able to get funded in those prop firms within their first 30 days, and they were collecting money by 60 days because they just kept it simple. And guys, the simple plan for consistency, I'm going to share this one because we have new people. Don't fight the large chart. Never fight the large chart. That's what we call the recipe for financial suicide. How to commit financial suicide, guys. My brother wrote this. It's a one-page book. All the other pages are blank. Chapter 1, warning signs your friends are in trouble. You're my friends. They're trading against strong triggers. Chapter 2, warning signs your friends aren't paying attention. They trade in determination conditions. Seek help immediately. Guys, I'm going to tell you right now, you will fight the large chart in the beginning because you're bored, because you're excited, because you think you saw something. Make sure you post it in the room. We'll talk about it. And then define your entry. Where am I going to get in? Guys, I'm going to get in where the market is most likely to continue. That's my least amount of risk, the highest profitability, and great entries create manageable trades. Guys, give me 20 days to knock out the top of this plan, to get good at it, to seek feedback, and to be able to pinpoint this area. And then once you do, you're going to have to management. Replace boredom with patience. Well, absolutely, Marlon. I agree 100%. The challenge is very few people in this world seem to have patience, and it's the boredom that eradicates it from the playing field. Once you're in, you have to management, guys. Once you're in, this is where your palms get really sweaty. This is where your heart begins to race, guys. This is where the fear of loss kicks in. So in the very beginning, as you're learning this software, as you're learning this plan, guys, let your management be just as mechanical as your entry. Let your management be if-then, and you will craft a plan tailored to your personal goals based on your ability to read the indicators. Your management plan will change when you can read your indicators. But until you're comfortable and confident, guys, this plan is designed 100% around the idea that you can enter the market where the market is most likely to continue, and that you know to put your stop where the market shouldn't go. And then once you're in this trade, there's one of two things that are going to happen. You're either going to get stopped out. Guys, I can't stress enough that losses are a normal part of a positive equity curve. Or you're going to get that reversal bar that says, hey, guess what, Sid? JK, you're going to love this. Tracy, let's sing a happy song, because now the market's doing everything that the large chart said it was going to do. And you're going to move your stop about 2 ticks above the reversal bar in the direction of your trade. And at this point, I want you to sit on your hands, put them on your head, roll your desk back 6 feet. There is nothing to do. You're either going to get stopped out, guys, tiny little loss, whatever. It's a cost of doing business. Or it's going to hit your first target. Your first target is $100 away from your entry. And guys, your first target, KISS plan users, your first target is designed to get you paid ASAFP, to get money in your account, to start that process of confidence through the memory of success, to make sure that you feel good about everything that just happened. And once you hit that target, guys, it feels good. And your heart slows down a little bit and your palms start to dry up. And you're going to move your stop to break even. And guys, break even isn't the best stop. I'm going to tell you right now, it's not the best stop for the experienced user. But for the brand new user, what it does is it takes all the pressure to hold off because nothing bad can happen to you. And it's either going to go to your second target or you're going to get dinked for a break even, guys. And if it goes to your second target, once again, my goal for the new user is for you to get paid and get confident. You're going to exit that trade, and it's a $300 winner. And a $300 winner feels good. And a $300 winner, if that's the best you can do every day of your life, or even if it's 3 break evens, ladies and gentlemen, that is a $75,000 year based off of $300 a day. Kind of cool. 50 grand for only $200 a day. And when I ask people in this classroom, could you make $200 a day? Everybody says yes. But not everybody does it. How come? Because they forget that getting paid is the goal. And they start to say things like, I hope it goes further. I think it's going to go further. I want it to go further. Guys, focus on getting money into the account that nobody can take from you. And then when you're working with house money, go a little crazy. It takes $400 a day to get into 6 figures. Guys, you're going to pretty easily be in this range once you're good at what you're doing, once you're comfortable. And then once you do what Joe said, follow the rules, because the rules have been proven to win more than they lose. And then you're going to practice, you're going to get feedback, you're going to simulate, you're going to say, you know what, Mark? I'm kind of a big deal at this point. I can nail my entries. I don't jump around on my stops. I can follow my exit rules, and that's important because the first thing you do when you go live is you have to know why you will enter your trade. You have to know why you will exit your trade, guys. Rules eliminate emotion. Rules are patterns that have been proven to win more than they lose. Your process yields the results. Don't focus on the results. Focus on the execution of the method, guys. And they remove the emotion because if you've done the study, how many high probability trend trades should you win if you take 10 of them? Or more importantly, how many are you likely to lose if you take 10 of them? Has anybody paid attention to that? 70%, guys, 70% winners, 30% losers. So if I said, guys, I'm going to flip a coin 10 times. And I've flipped a coin 1,000 times before this, and because of this cool little weight that I put on it, it won 700 times to heads. It went to heads 70% of the time. And I said, you know what? You get 10 flips of the coin, $100 a flip. Are you ever going to bet tails knowing that this is something that typically wins 70 to 80% of the time? Of course you're not. You're going to say this is a pattern that's been proven to win more than it loses. I'm always going to bet on the winning pattern, understanding that I will take losses. Guys, that's how you get rid of emotion. So know what kind of trade you're in and know what it's going to take to get you out. And every time you add a trade, you add not only entry but also exit rules. And every time you add another, there's more. And every time you add another, there's more. And you are very likely to confuse your rules if you have too many too soon. So get really good at the high probability trend trade. Ask a million questions on the high probability trend trade, and what you'll find is that the rest of the trades come easy. And I'm going to read what Ron said here. If you see someone taking trades that look neat, ignore it. When you know the high probability trend trade by heart, you will have seen many other trades, and they all rely on chart reading. High probability trend trade and Mark, that's me, will show you how to read charts like a boss. Worked for him anyway. Guys, once you can read your charts, you're going to find opportunity. Thank you for putting that, Ron. And what you'll find is that the biggest difference between successful traders and those of you that are struggling is the ability to do nothing when there's nothing to do. And well, Mark, how do I know there's nothing to do? I don't have the advantages I need to take a trade. My rules aren't met. My plan isn't being followed. So this is where I give everything away, guys. This is where everything that I just talked about gets put right in front of you. So I'm going to give you the spreadsheet. I'm going to do this one first. I will give you all of those sheets in a Word document. but I fully understand that not everybody has Microsoft. So I'm going to give you the same in PDF. All you have to do to get these out of the chat box, ladies and gentlemen, is either click the download button, it'll go straight to your download folder, or you can click and drag whatever it is that you want over to your desktop or to whatever folder you want it to be in. So the one thing that I told you in the beginning is I said, you know what, guys? My promise to you is that I will give you everything that you need to use the software effectively. I will give you everything that you need to create a plan capable of winning more than it loses. Hell, I'll even give you a plan that wins more than it loses. I gave you the rules. I gave you the looks. I showed you how to study them. I gave you a spreadsheet to chart your progress. I've given you my word that I'll give you live feedback 15 hours every week, a private session, and all you have to do is post in the room and tell me what you see. Guys, the only thing that Nexgen can't provide you is experience. The only thing that Nexgen can't place in your hand is the repetition needed to make these looks easy. So, we finished up the first half of class. We're going to go into the second half of class, guys. And the second half of class is 100% dedicated to your charts. So, every chart that I look at, I will discuss the 3 rules because the 3 rules are what new users need, and this is an educational process. So you may see a trade that doesn't fit, but what you're going to notice is that momentum and a clear path show up on an awful lot of winners. And once you learn these 3 looks, guys, you may deviate outside of the rules and create a plan. But as you become a chart reader, it's imperative that you tell me what you see. So every chart posted in this room, my request is that you talk about momentum, path, and entry. No matter what, you talk about momentum, path, and entry, guys. If all you want to do is show off, I want you to put that picture in an envelope, mail it to your grandmother. She'll put it on a refrigerator, and she'll be very proud of you. What I want is to build chart readers. What I want is that if you need help on entries, I'm able to give you that help because I know why you entered, because I know why you exited, because I know the conditions that you thought were enough to get you into a trade. So I don't think that's asking too much. Tell me what you see, I'll tell you what I see, and we will walk hand in hand to getting you exactly where it is that you told us you wanted to be as a confident day trader. So I'm going to go relax. How many divergences do I have in the same price range here, guys? Anybody? I see 3. What does that tell us? That says don't try to go long right here. It has the potential to break, but my small crowd is telling me we may push lower. Jeffrey, possible 4. Why even go there? You've got 3. Once I have this, Jeffrey, I don't care if it's 75. It's game over. Done. Over. That's overthinking. That's looking at something that simply doesn't matter. Avoid that. Once you hit 3, guys, you guys remember Monty Python, the Holy Hand Grenade? Pete's got 6. Pete paid extra. Do you know why, Tracy? Great observation. This is the small chart scenario. Check this out. So right here, the sellers stole the momentum from the buyers on a smaller, faster time frame. And they made it all the way down to here, right to the bottom of the triggers. And the buyer said, sellers, we're not done. We want the market to go up. And Tracy, that divergence high created by the sellers is a line in the sand. This is the exact price where they told the buyers to go to hell. And look at this. This is the exact price where they told the buyers, we told you to go to hell. That's where we're going to push. That's one of the reasons that divergence lines on the large chart are termination conditions. Guys, it is a 100% line in the sand where the tides changed. But the thing is that this is just a small chart. It won't be a termination condition unless we get it on the large chart, because check it out. Here we go. This is a great example. There's a couple of them. Let's take a picture. And I'm going to give 2 lessons on this one, guys, before I take a break. I love my breaks. I believe you should take a break. So guys, this right here, I don't like the red arrow. Let's change that. Let's go easier to see. Guys, this is a pivot where the buyers stole momentum from the sellers. That's how we get this blue line. Guys, this pivot is not a termination condition. This pivot is just a loss of momentum. Can you guys give me a why? If you're cool with that. This is the exact point where the buyer said, yep, no more. We're going to steal your momentum and push the other direction. Well, somewhere up here, the sellers got cute and said, you know what, buyers? We told you we wanted to go down. We got stuff to do so much lower. And when the sellers hit that line in the sand, that divergence low, every buyer got into their feels. And they said, you know what? We told you. And look what happens. They let the sellers get 2 or 3 ticks, and then the buyers push even harder. This is what we call a pivot stop out. And a pivot stop out first needs a pivot. Whoops, I keep doing that. Here's my pivot. Here's where every seller got stopped out, guys. This is a termination condition, and it uses that same line from 3 hours earlier. Does that make sense? This is why these are powerful. And look at this. So the buyers push it up. They're like, ha ha, we beat the sellers, and the sellers are like, dude, we really want to go down. And the buyers are like, you're close to the line in the sand. This is almost the first one. Let's push up. And the sellers go, no. And the buyers are like, dude, here we go again. And look at this, though. The seller said, we're giving you a line in the sand, buyers. And then it gets caught. And rule number 2 defines consolidation right at those key lines in the sand. And eventually, there's a breakout. Not getting, okay. Thank you for saying that, Tracy. All right, so here is the base. Oh, you know what? Tracy, I've got the perfect thing for you. I wrote a little blog entry on this very thing. So I'm going to give you this in the room, but I'm going to open it up and we're going to talk about it as well. And Tracy, I owe you a big debt of gratitude right now because most people won't say, hey, Mark, I don't get it. And when you say, hey, Mark, I don't get it, it becomes my mission to make sure that you do. So one of the most misunderstood concepts with termination conditions is when you have a pivot with a loss of momentum compared to the pivot stop out. The pivot stop out, now I got you. The pivot stop out is a termination condition. A pivot just means that the market went up and the market went down. Does that make sense? And let's make sure, I'm going to ask that each time. A pivot means the market went from up to down or from down to up. And all it is a change of direction. Everybody cool with that? Can you give me a why? All right. If the momentum of the market does not follow price, there is a disagreement between price and momentum. So the market goes up and back down, and the momentum couldn't follow price. That's what creates this pink line. That's what creates this light blue line. And all this is a loss of momentum. Resist the urge to give it any value beyond that. Is everybody with me so far? This is a pivot. This is a pivot with a loss of momentum. This is a pivot. This is a pivot with a loss of momentum. That's it. There's nothing beyond that until when price returns to that divergence line. trades a little bit above it, a little bit below it. Now you have a pivot stop out. So do you guys remember the recipe for a termination condition? Where it said that price must reach the area? If we're talking about this divergence high didn't become true until halfway through the third bar, which means price doesn't reach a divergence. When it's created, price creates the divergence, the first divergence line. Here, price reaches the line. Right here, that divergence line, because price reached the area and the triggers remain below, becomes a termination condition. Does the same thing on the fib, becomes a termination condition. This divergence line isn't created till down here, not a termination. And when price goes a little bit above and then back below, guys, absolutely no long trades. This is the look that lets you know that the sellers said no at that line in the sand. So the same is true down here. Price comes down and goes up. This pivot has a loss of momentum. When price comes back to that pivot, now it's a termination condition. When it trades below and above, now it's a pivot stop out. And pivot stop outs, when they happen at key Fibonacci areas, are unbelievably powerful. So first a pivot, Tracy, good? Termination, pivot stop out. First a pivot, even this short little run. When price comes back to this divergence low, now it's a termination. When price came back to this divergence high, now it's a termination. And guys, look at this. 1, 2, 3 divergences in the same price range, and that's what set that mofo off to the upside. Mofo is a technical term. And then we use it on the small chart to show us the change that we can't see on the large chart. Guys, was that helpful? I hope that was helpful. It's a little advanced, but that's why. That's why we respect those divergence highs and lows as termination conditions. That's why those divergence highs and lows found their way into the list, because it's creating a line in the sand. So when I consider the same price range, Pete, I will use the exact rules that I use for broken areas, right? Because on a large chart, until the small and large triggers get below this divergence low, it's not broken. Until the small and large triggers get above this divergence high, that area is not broken. Does that make sense, everybody? That is that chart reading 101, when is an area broken? So Pete, on a small chart, what's the same area? That's the same area. Whoops. That's the same area, and that's just a higher divergence. So I won't consider an area broken until the small and large get below it or above it. So when the small triggers and the large triggers get above this divergence high is in my rear view mirror. It no longer factors in. It even stops printing. But Pete, you may have to use just a little bit of common sense. Would you say that these three are in the same area? I would. That's a pretty tight range. I would say that these three are in the same area. I would say that these two have a pretty good gap between them. I would say that the difference between this one and that one is huge. I would say these are all pretty much in the same area. Only two. These are in the same area. Does that make sense? So guys, you are going to have to make a decision every now and then. But if you wonder if a divergence is broken, it's not broken until we break above it. And look at that. It is still printing to the right. Pretty cool. Guys, that is the longest first hour ever, which is awesome because it means that you guys are taking the time to learn this stuff. So I'm going to go take a break real quick. And when I come back, the second half of class will be dedicated 100% to your chart. So we'll start at the top. Joel got us going with about 175 and a lot of great charts in there. Guys, if you post them early in the morning or late at night, I look at them so I know exactly what I'm going to talk about. And Joel gave you guys some amazing stuff to talk about. So I will see you in about 5 minutes. And there we go. There's your pivot. There's your pivot stop out. Live Dolby Vision. I'll be back in 5, guys. All right, guys, let's start talking charts. But I just want to ask you real quick. Are you becoming a believer in key areas and their potential to stop the market? I hope that you are. I really hope that you are. So I'm going to scroll up to the top of the chat box, guys. I do have to go all the way to the top and then back to the bottom to answer questions. So if I miss a chart, if I miss a question, just do me a favor. Say, hey, Mark, you missed one. Here's what time you missed it. Do me a favor. Go back. Give me a little feedback. I never skip them on purpose. I promise. However, I have been known to miss one. Let me figure out. I'm going to do this. That's too much. All right. So Joel got us going at about 10 o'clock last night. Joel doesn't sleep. And I'm going to take a look at what he's given us. First trade, 50-50. One area not broken. He's got odds favorable momentum. He describes it as that medium probability, 50-50 trade. He's got the momentum that he needs. He's got, doesn't have the momentum that he needs. Has divergence. And guys, the plan in the KISS plan is designed to optimize your chances of success on the 50-50 trade. This one didn't fit the rules. And he said no trade because my rules weren't met. And guys, that is awesome. That is great adherence. And you have to be okay with whatever happens after your trade's rules aren't met. Let's see. Middle chart, strong momentum, small triggers. Yes. Small triggers beyond the area to buy or sell. Yes. Range chart, both triggers have momentum phase. Yes. And Joel says, you know what? Once I get above the trouble area, I can use momentum to capitalize. Joel, once again, 2 for 2. Outstanding. And then this is the exact same look, Joel, but here's the deal. Gotta let those triggers break. Right? Just a little bit above the fib area, and that's where that circle belongs. Same look, just got to let the fib break. This one's perfect. Everything says down, the path is clear, momentum is strong. Enter right at the area inside of favorable large triggers. Joel, easy money all day long. Momentum, oh, Joel, this is a tough one. This is directly into a termination condition, 100%. A little riskier. A little bit riskier here, Joel. I'm trying to figure out, this is NASDAQ. And you know what? Because it's NASDAQ, no, I'm looking at it. Because it is NASDAQ. Let me see if I can make this a little bigger and see some numbers. The circle lines up. You've got momentum. You're anticipating a breakout. And you're on the correct side of everything and it snaps back. You know what, Joel? Because you're coming from a termination, because you've got every chart agreed, great trade. This is the one thing that would tell me, uh-oh, watch out. And you did it perfectly. You took the best of the best, lowest risk momentum trade there. Solid, Joel. Everything says down with a clear path. Joel gets in at the area inside of favorable large triggers. I mean, come on. Absolutely beautiful, Joel. Putting on a display today. Divergence, divergence, don't have a clue, just an observation from an old man. I love that. And Joel, this is one of those times where there's just not a whole lot to do, right? You're coming off of resistance. You probably are coming off of support. You're caught in an area. Everything says up. And it disagrees over here. So maybe up here, Joel, there's an opportunity around 22, but does it really give you room to 27? I like it. You're recognizing change. You're looking at change. There's just not a lot of room once it all agrees. Good stuff. And then one more. Everything rolls. And Joel capitalizes. Joel, this is one of those mornings where I want you to give yourself a high five. A lot of great chart reading. A lot of great opportunities. I mean, just nailing it. If you guys don't think practice helps. All right, Miss Jen. Hopefully not jet lagged anymore. Jen says, check it out, Mark. This is a termination, and when it reverses, it's a strong bottom. And when it gives me odds favorable momentum, this 50-50 trade's beautiful. Mark, I want you to notice how I absolutely sniped the entry, how I took some quick profits, and how I absolutely chickened out at 58. Just kidding. That was her second target. Jen, beautiful. Textbook trading. You guys make me so proud. It did go, but it took the money. That's all right. In the beginning, keep it simple, right? Keep it focused. Get paid. You'll learn how to hold for bigger moves. You're about to. This is Pete. Guys, I need to go open the door for my dog real quick. Excuse me, just 1 second. All right, guys, thank you for your patience. All right, so Pete says this is his warm-up trade in sim. Powerful trend up, smalls riding the large. Guys, this is what we call a strong trending market. 30 plus bars in the same direction. The smalls and the large like become one. This is, you're just saying, all right, rule number one is met. This is the only time where it'll take out needing that separation, is that look right there after 30 plus bars with no reversal bar. That's a strong trending market. And Pete says, when I have a strong trending market, I'm going to keep buying the mid band until it stops working or until I hit an area. And guys, this is pretty outstanding. This is understanding where the market is most likely to continue. Understanding where the market is most likely to go. Pete, really nice trade there. And then termination condition. 3 divergences in the same price range. And Pete says, you know what? Let me get in just above trouble and let me get out at the next trouble. Really nice trade again, Pete. Using chart reading to put you in there. Until you get in and then it'll reverse, Ed? No. People think they have that power. They don't. Guys, there's 2 sides of every trade. There's the trade that has the most advantages, and then there are the people that have to lose so that you can have your trade. Which side do you want to be on? Whoever was on the other side of this long trade thought it would be a good idea to trade into resistance or into support, right? Whoever was on the wrong side of this trade thought it would be good to fight momentum. Pete says, guys, look at this. Life doesn't have to be hard. Let's make some money. Great job. And everything says up. Perfect entry. And Pete knows that it's his job is to get paid. 660. It's the devil's money, Pete. And then he gets back in because the rules are met. And then he gets back out at trouble because the goal is to get paid. Guys, look at this. High probability, medium probability trend trade, high probability trend trade. Medium probability, perfect. High probability, perfect. Look at his entries. Like a sniper. You can learn how to do this, but you have to wait for it to happen. It just didn't want that fib yet. And Pete says, I'm not going to sit and hope, right? We'll see. Maybe they get it, maybe they don't. There's already 2 divergences. A third divergence would be enough to keep it out. If it seems like it's personally attacking me, you're the idiot, not the trader. Yeah, I feel the same way, Dab. Guys, when everything isn't working, that's when you've got to stop and make sure that you're doing the things that normally work it. And when I have a rough day, and guys, I have a rough day, I read charts with the best of them. When I have a difficult day, when I take losers, when things aren't working out the way I need them to, I've got to stop right then and go back and do that review, and I've got to look at the pictures that I've taken and the annotations and make sure that I'm actually following my rules. Jen, large chart was still good, was it? Odds favorable momentum, not heading into potential termination conditions, my dear. Reaching a termination condition, 100%, without questions. Oh, Pete, sorry. I'm sorry, Jen. Well, Jen, that lesson was for you and stuff? Yeah, guys, I'll make mistakes like that. I'm old. Directly into a termination condition. There wasn't divergence, and Pete said, you know what? This is one of those times where I'm willing to take a shot at breaking my rules because of the momentum, because of no divergence, because of strong triggers, and you got stopped out where the market shouldn't go. And rule number 2 absent, and Jen, I apologize for putting that on you. And Pete, this is kind of interesting, and let me know what you think about this one. They just didn't get that fib yet. What a great spot for them to continue up and go try for it. Kind of cool. I like the shot. I probably would have used the reversal bar and kept it lower risk because it's directly into a termination condition. Could have been 5 ticks instead of 11. Something to think about. I don't tell you guys how to trade or where to put your stops. Not my job. And Jen, the reason I made the mistake is because I saw you were next. And Jen says, strong top, 50-50, odds favorable, no divergence, perfect entry, got stopped out. It happens. Medium probability trades, guys. Great job. Did you use 2 ticks above 49? Nope, you gave it extra 2. Guys, that reversal bar is huge. Gotta post the losers. But let me show you something. Boom, 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 boom. So Jen, using the reversal bar 2 ticks above rather than outside of the triggers. It already told you everything. And guys, this is for everybody, not just Jen. And I said this yesterday, I'll say it again today. Sometimes I'll use your picture as a general lesson for everybody. And I want you to see this. The difference between your stop and 2 ticks over the reversal bar is 20 bucks. Pretty insignificant, right? Whoops, where'd that go? Whatever, it's 20 bucks. Well, if you do 20 bucks, okay, 40 bucks. If you do that every day during a trading year, it's 10 grand. A $40, I hope it doesn't come get me, is 10 grand. And that's one trade, right? That's one trade. My brother did this to me once. I was like, well, I added, I gave it an extra 5 ticks, John. And he's like, really? Because giving it that extra $125, what if that fails every day for a year, Mark? Are you willing to give up 31 grand? And when you start thinking about how these tiny increments create huge advantages, whether it's putting more in the wallet or pulling out of the wallet, I kind of think that way. So like if I'm hoping an area breaks, I'm super tight. I love it. Guys, I like the trade. I really do. I don't think there's anything wrong with the trade at all. It just didn't work. But one of the things that I do in the room is if I see an opportunity for you guys to not give so much back, I get vocal. It's what I do. All right, we made it through the big flood. Let's see if we can get it to the next pictures. Pete, again. And guys, if I can just say, there's a huge correlation between how many pictures Pete trades and why his P&L is almost always green. Guys, classic medium probability trend trade. Trigs down wide, 50-50 trade, perfect entry, perfect exit. That's the easy one, guys. That is the easy trade. Nicely done, Pete. And respect fibs and profit targets. Pete, can we do something funny? And this is one of those times where I'm going to use your chart as a great example for everybody. And this is the trading mindset, right? This is one of the most intelligent things you could ever say. Look where he got out. And then check this out. Let me put them side by side. Respect those fibs. F that fib. Guys, you'll change your mindset based on how you feel in the moment. I've done this before too. I've annotated charts going, that doesn't fit my rules. And then I go back 2 pictures earlier. I was like, well, that's where I justified it, right? So consistency in rules. And the difference is, guys, is Pete still didn't have divergence here and really strong. So he made a decision, and I don't disagree with his decision. But it's always funny, and I guess it just points out, I don't forget stuff, guys. It's annoying as hell. I don't forget stuff. If you post in the room, I remember it. If you post a winner, I remember it. If you post a loser, I remember it. And guys, what happens is that's one of the great things about this room is that every time you post in the room, I begin to recognize your patterns. And when I begin to recognize your patterns, guys, it becomes easier to give you the help you need to get to where you want to be. All right, Tracy, you said that it reversed on you, right? So you had a strong top. You had a 50-50. This is actually not a strong bottom. This is just a pivot with a loss of momentum. That's it. Not a termination. So you recognize that you were 50-50, correct, Tracy? You had the perfect where it's coming from. You had the most awesome look ever on momentum. You had the entry nailed dead to rights. And Tracy, this one didn't work, right? And you're like, man, it sucks to be me. Why did this happen? Well, it happened to Jen as well. You took the perfect trade, Tracy. You took it as well as you could ever take it. And it just didn't work out, man. And I like that you posted it. And I like even more that Jen, who has a world of experience, took it. That Pete, who has a world of experience, took it. It means that you're reading your charts. It means that you understand the rules. It means that you know exactly where to get in. And now you're learning the lesson that not every trade can be a winner, even the ones that look perfect on paper. Well, that's where consistency comes in, right? So, hypothetically, if I had rules met, and this is hypothetical here, and if I had rules met here, and if I had rules met here, and I had rules met here, okay? And each one of these, guys, is a 100% positive, hypothetically, not really, I'm lying through my teeth. But you have to pretend that these all fit the rules. And then I took a short here and lost because it didn't fit the rules. And I took a long here and lost because it didn't fit the rules. And I took a short here and lost because it didn't fit the rules. And because I lost this trade, I hesitated on this trade. And because I lost this trade, I didn't enter on this trade. And because I broke the rules and lost here, I didn't take that one. And guys, this is your recipe for taking more losers than winners. When you break your rules, you begin to question your rules because it couldn't have possibly been you that created the challenge. It had to be that the market is against you, that things are bad. And I know this because I've talked myself out of a lot of winners. How's my momentum, guys? You like it? Odds favorable? Clear path? Waiting for a reversal bar? Lowest point of resistance? Right at the triggers?
Order submitted.
How quickly did that happen? Why is that an MIT?
Order submitted.
Do you guys see it? That resistance is right at the top of the triggers. My momentum is strong. My path is clear. One divergence doesn't scare me. I'm a couple ticks below the lowest point of resistance. Holy crap, what a great look. Are they going to get me? Give me a Y if you see it. Sid, Tracy, JK, Marlon. This is what we talked about all morning. I have been in control of everything that I can be in control of at this point. The only thing I'm not sure of is if that small crowd can get me. But if they don't get me at my perfect entry, I don't want this trade. And the cool thing is if they do get me, I know precisely whoops, precisely where my stop needs to go. About 5 ticks above. And guys, look at the fluctuations. Coming to get you, gonna leave you. You're gonna get filled. No, you're not. This is where you guys start going, oh my gosh, it's going without me. Let me jump into this market. And hopefully they come back and get the real entry and don't just reward us for bad behavior. But guys, I see trades down here all the time and risk all the way up there. And well, I screwed that one up because it went anyway, and that happens sometimes. Dag nabbit, that's the worst thing that could have happened for a classroom. But that's what you do. Either your rules are met or they're not. Still have odds favorable, still have a clear path, still have a mid-band inside of favorable large triggers, still 2 ticks below it. If this one didn't get you, they may come back for you. And we'll see if they do. Here they come, 2 divergences. It takes 3 with this look. Man, let's see if they get us. We're just doing it again. I didn't get filled here. 2 ticks below. I'm filled here. My stop goes up here. Reversal bar, I'll move my stop. There's 100, there's 200. So now we're kiss planted it. Odds favorable, clear path, pull back to the mid-band, inside of triggers, stop where the market shouldn't go. It's either a reversal bar to reduce my risk, or it's a stop out. What does the large chart say? Large chart says down. Large chart says momentum. Large chart says the path is clear. Guys, I've got every advantage I could hope for on the large chart. It doesn't guarantee a winner. My stop is probably a little further than it needs to be, but the point is, I'm never in control of anything but whether or not my rules are met. I'm never in control of whether or not it's a winner, whether or not it's a loser. I can never control whether or not it goes down, whether it goes up. But what I can do is I can follow a pattern that has been proven to win more than it loses. And sometimes it's going to get me. And it may come get me. There we go. It got me. It happens. And guys, I don't mind taking trades that don't win in front of you. Because I'm going to tell you right now, not every trade's a winner. But what needs to be consistent, and if you go to the client trades, you're going to see this. Rules met, high probability trend trade short. Didn't work. Odds favorable, clear path, perfect entry out. Exactly like we just did in this classroom, guys. And anything that wins 70% loses 30%. And I am so convinced of that I put losers into my spreadsheet for you to study so that you can study the pattern. Isn't that a bummer when that happens, though? That's all right. Let's see what's next. Bum, 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 bum. Scrolling, 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 guys. Remember, we don't control the market. The only thing we control is whether or not we follow our rules. Dab chain, you gotta do me the favor, man. You gotta tell me why. Because you went short and you held through so much nonsense because you have simulator balls, my friend. And you don't have mid-bands on your small chart. And you're fighting momentum and you're holding ridiculous and going to the next area. Dab chain, I love everything about this trade, but I have absolutely no idea why you did it. So good job getting paid. Great job holding through over $1,000 worth of drawdown to get to the next area. I can't figure out why you held. There has to be a reason, but you didn't share it with me. So it's difficult for me to give you feedback. So congratulations on your big win. Miss Cindy, odds favorable, potential to break the divergence low. It pulls right back to resistance inside of favorable large triggers. Out at the first trouble spot, out at support. And for the big hold, this is your husband's. He says with this look, the market is likely to continue. Absolutely not a clear path. 100%. So, Mr. Cindy, not a clear path. Tons of trouble. 3 divergences. But you said with momentum, I'm going to give it a shot. I'm going to get paid. And when I get a pivot, I'll trail a stop. And when I get a pivot, I'll trail a stop. And when I get a pivot, I'll trail a stop. And when I get to that big, ugly, fat blue line and it breaks through a little, I'm going to tighten it up. And this trade is beautiful. Look at the momentum on the large chart, guys. And notice that the exit comes at the area with weak triggers. This is rock star experience. And when you're going to hold for bigger moves, the same pivot that gives you the stop above it is the same type pivot that you're going to trail behind. So even if it failed right here at the fib, he had virtually no risk on it. How cool is that? Cindy, high five him for me. That's a great trade. That is trusting the large chart. That is believing in momentum. All right, Joel, termination, 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 momentum, 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 entry. Oh, they got you break even. So you got 100, got out break even, and re-entered because everything was beautiful and made it all the way up. Joel, great trade, bud. And it all began with coming from a termination condition, guys. The whole idea behind Joel's trade is look at this key area that stopped the market and reversed it. What a huge flag. Saying, guess what? That's a pretty good look. Pete says 6 divergences in the same price range. That's a pretty significant look. Nicely done. All right, Cindy, let's see what we have. Strong triggers, clear path. Didn't catch this one, right? And it's just on its way up. And with all this momentum and nothing in the way, it becomes pretty easy. And you said white bar. Support holds and all the triggers are above it, right? Pull back, termination. Triggers roll, white bar, take the entry, giddy up. Nicely done again. Nicely done again. Not the clearest termination condition, but when everything says up and it pulls right back, what a great look. And then odds favorable, clear path, perfect entry, get paid. That's given an awful lot back into a line, Cindy, isn't it? Can we do that same thing that we did with Jen? I think this is impactful, really. I think this is impactful. So the key area here was at 38, and the exit was taken at 47. That's 9 points. That's $180 on the NASDAQ. Times 252 trading days. That's a lot. And that's okay. So one of the things that I really liked, right? And Cindy, this isn't me giving you a trading plan, but this is something that I'll do. Because I understand that this is such a key area. I know this is a key area, right? So when you reach it, what if a reversal bar directly from a fib was enough to get you out? Does that make sense? And you could even use your market flow chart, which will get you even tighter. But this is one from earlier today. I knew this could stop the market, but I thought it could go, so I gave it a reversal bar's worth of room. And that's significantly less. And then I think I had one where I gave it a reversal bar on the market flow chart to take me out. Like, I'm all for areas that have the potential to break, but I'm even more all for not giving that much back. And look what you had here. You had the fast triggers on the wrong side. You got a long signal antenna bar, right? You had a lot of reasons to think things may at least retrace there. Great job, Cindy, though. Great trade. And that is certainly not a comment saying that you did it wrong, just maybe an opportunity to pull a little more out of the market now and then. Everything says down. The momentum is overwhelming. Split triggers. So you said, you know what? I'll get in at the high point. No reason to get in at the low point. I'll get in at the high point. It's 50-50. Let's limit risk. And easy money. Now, how come you held it yesterday all the way to the fib and then even when the fib held, in this one you jump ship? Because this one, it was too fast. Oh, to move your target? Okay. Isn't that the worst? I mean, it's wonderful because you get profit targets hit so fast, but you're like, oh, I could have held for so much more, but I don't have those spider reflexes. Seconds. Amen. When you take the right trade, very often it is in seconds. Jen says, no rules met on the large. The 90% weight mode. 5 divergences. Weak triggers. No clear path. Everything's crazy. I love these pictures. What is this? This is Jen saying, you know what? My money is worth having advantages. Let me take a picture instead of a trade. I love that. What a great strategy. And then let's see what her next picture is. Whole lot of more nothing to do. Thanks, rule number 2. Jen, great pictures. All right, Haji. Question, the market flow chart here shows a lot of areas above price, many more than the big and small chart. How much weight do you give these areas on the range chart? 5907 has a 21 area and an 8 range area. 5907 has a 21 area. 5907 has a 21 area and an 8 range area. You have the same number of areas. Here at 0350, there you go. You've got an area. Haji, they actually all line up, brother. So it depends. This is an HVA question, or HVA. This isn't an area. This is a pink line where the sellers drew a line in the sand. Does that make sense? Areas are fibs. Well, what does the outer band mean? So what you're asking for is, Mark, what the hell am I looking at on a market flow chart? I think that's a more fair question. So let's do this. I like this question. Do I have a market flow chart? No. Let me build a market flow chart real quick. I don't use one on these, so for me, I have to build it. You would think I would just keep it, but I do so much drawing in the classroom that I prefer to have as little going as possible. So let me pull up the chart real quick, and we'll get this build, Haji, and let's talk about it, because I do like talking about it. But here's one thing that I wanna bring into play. Your large chart has one trigger up and one trigger down, right? Your large chart has a pivot stop out, but it's also coming from resistance. Your large chart doesn't have a clear path because of this. So I'm not entirely sure what it is that you're looking for at this point. And that's the first thing, right? What does the large chart say? So hypothetically, Haji, yeah. So, okay, you were just reading the market. So check this out. You're going to love this. I'm about to make your life 1,000 times easier, Haji. If your rules aren't met, who cares what the other chart says? Doesn't matter. Doesn't matter what market flow says if your rules aren't met on the large chart. And what happens is, not that I've ever done this like 178,000 times, you'll talk yourself into trades because you believe the market flow is giving you some advantage that it actually isn't. So let's talk about market flow chart, right? The pink lines, and I'll pull up mine real quick. So the pink lines, when the market goes up and down, if there is nothing but sellers in this bar, Haji, this pink line represents the highest concentration of sellers on what's called a breakout bar. The same is true here. Up bar, breakout bar, highest concentration of buyers. So when the rules are true, we can use these HVA lines to help get in right off the bottom. And we have what we call the HVA trade. And this is a trade that, I take too many pictures, but let's see where that one's set up. When a termination happens, that's the first step. When my market flow chart gives me this breakout bar off of the reversal from a termination, this blue line or this green line right here, this is the line in the sand. This is the highest concentration of buyers. So when the rules are true, when the termination is there, when the triggers roll, when price comes to this blue line, one of the trades Nexgen teaches is the HVA trade. And this is your first shot at catching a bottom, right? So let's look at this. My first target was just below the HVA line here, because this was a line in the sand from the sellers. This could have been trouble. So I used this line because I was in a long position as my first target. And then the fibs were all there on the large chart, and that becomes my second target. Does that make sense, Haji? So if you're in a long trade, when the rules are true. They're not support or resistance. Support or resistance is blue, is red. HVA is nothing more than a line in the sand. Why does it appear to act as resistance or support? Let me show you. Let's scroll back. Because when I have a termination condition with a breakout bar, it creates this line. When price pulls back to it, you're saying, hold it. That behaves as resistance, but Haji, it's not. Do you remember when we talked about the divergence lows? And the divergence low is a line in the sand that says, if you guys try it, this is where I'll unleash. That's how these happen. But look, if the rules aren't met, it's not support. The buyers tried, but the seller's overwhelmed. But when they happen off of a termination condition, that's when there's power. When there's a termination condition and you have this blue line, that's where there's power. When there's a termination condition, this looks like a termination condition. There's your blue line. They tried to get away, and when they came back to it, look what happened. The buyer said, nope, we put a line. We already let you hit the fib. We're going up. There it is. We came off of the fib. We created the line. You guys tried again. There it is. Boom. But it's not support, because they will blow through these things all the time. It's just a little visual of where these guys are putting a line in the sand. And then once you're in, the opposite color, right, that pink color, shows you where the sellers may do the same. And what a wonderful place to take profits. What a wonderful place to be aware of change. Does that help a little bit, Haji? And then you'll also see it, maybe I have a high probability trend trade. Let's see if it happens here. Not there. So let's say Pete is looking for the trend trade, right? And maybe right here, Haji, there's that pink line. There is that, hey, look, not only is there a pullback to areas inside of favorable large triggers, but there's also a high volume area that says if the buyers push up, this is where the sellers are most likely to push down. So I mean, you could call it an area all day long, Haji. But it doesn't mean squat if the conditions aren't right. How's that? You can call it an area. Hell, we could call it a goldfish. Doesn't matter. It's irrelevant if the rules aren't met, right? Large chart's screaming up. Small chart was screaming up. Range chart screaming up. That's not me looking for anything. That's me saying that if I got long right here, this is my first trouble spot. We're going to call them goldfish lines from now on. Great question, Haji. Thanks for posting that, man. Everybody gets a little bit smarter when people ask questions. They really do. All right, Miss Jen. When I entered odds favorable momentum, smalls were through, 50-50, no divergence. Good entry, didn't work. Getting pissed. Why? You think they're out to get you, Jen? You know, it's funny. Every morning I get a call from somebody in the CME and they're like, Mark, I just want to remind you, F them Aussies. Hate those Aussies. Check this out, Jen. I want you to see something. Weak triggers didn't go. Mid-band gap theory didn't go. Weak triggers didn't go. Termination didn't go. Termination didn't go. Right? We've got a pretty well-established range here. Wouldn't you agree? Let's talk about what it means. The buyers tried, the sellers tried, the buyers tried, the sellers tried, the buyers tried. Holy crap, we finally got a breakout just barely below the range that's been holding. So there's one of two things that happen on this trade, Jen. So when I've had consolidation, Rule 2 defined it, right? Do you see it? Something to think about, guys. A little next level here. This is what John used to call the fake out breakout. And it rhymes using the same word, but you know it's true because it rhymes. And what the fake out breakout is either the buyers or sellers let the opposing force think they won. Then they crush them. Because what they did by letting them think that they won, the buyers get a better price for their really, really hard push up. So Jen, and everybody else that's listening, when you've had consolidation, your 50-50 trade, it is either going to be a gangbusters, holy crap, buyers can't sell them when. These are the ones where you can't move your stops fast enough, or they are going to get decimated. And either the fight's going to continue or the buyer's going to push it on. And you never know. But when I've identified consolidation and it's still 50-50-ish, I don't think it's quite as powerful. Does that make sense, Jen? And everybody else in the room? This is one of the lessons that I had to learn. And I think that let's see if we can find it, because I think we had some consolidation earlier, right? Rule 2, Rule 2, Rule 2, Rule 2, Rule 2, Rule 2, 3 divergences, 2 lower divergences. Do you see how they're winding up and fighting? Sellers think they have it, just for grins. That was the lowest point of the fight. And they got stopped. And it doesn't mean that it's not a good trade. It just means it's that damn fake out breakout. And I think we had it earlier too, didn't we? Maybe not. Maybe it was crude oil that had it. Let's go take a look. Rule 2, weak triggers, Rule 2. That was an attempted breakout. Do you see it? A little bit of fight, tried to break out, sellers win, but there was a better consolidation here. That's a big fight today. If you broad stroke it a little bit, Crude hasn't really made it out of a range, guys. But I love that lesson. And all it did for me, it never told me don't take the trade. What it told me is be prepared that it doesn't work. Be prepared for it not to work. And if it does work, hell yeah, life is good. So Jen, I like it. Don't waste your energy being pissed. I'm the only one allowed to be mad in this room. Great lesson. Thank you for posting that. Because it's the same lesson that Morgan just learned. Retested same area twice, failed to break through, so I would say it's a strong top. I love this, Morgan. You know what? A strong top makes it easier for me to take this trade, so I'm going to create a brand new rule in the moment that defines a strong top. Welcome to day trading. It's not a strong top. It's very much a weak top. Would a weak top have kept you out of the trade, Morgan? And then Morgan, earlier you said not advocating for a trade, but alas, how does crude oil look to you right now? Haha, the top on the large chart is weak, but the small has many divergences. Does it make it a strong top? I guess we answered that one, right? Guys, remember, crude oil is split volume. Crude oil right here at 11 a.m. had crude oil inventories, and look what they did. They tried to push it up, and it still wasn't enough. Crude oil is what we call, it's a technical term, it's a cluster foxtrot Charlie going on right now in crude oil. There's no volume. All right. So clear path, strong triggers, triggers open like scissors. That got cut off. And Joel's saying everything is screaming and he hadn't reached trouble yet. And Joel said, you know what I can do is I can just capitalize once I get above support and just take a quick little runner up to the trouble spot. And man, that exit looks brilliant, doesn't it, Joel? And then you got out with the loss of momentum on the second contract. Joel, you are absolutely destroying it today. I love it. All right, Miss Jen. That one didn't work. And they said, Jen, we are so stinking sorry. Let's get all the triggers below. Let's get you that clear path. Let's give you some momentum. And why don't you go ahead and make some of it back? This was a revenge trade? You were pissed? Yes. So let's talk about it. Everything said down, right? And they stopped you out. Why? Because we're not in control. That's it. And look how far up they pushed. What did your large triggers do? They ended up clearing the area. Your small triggers never got through. So when you broke the area and you had momentum everywhere, Jen, I think that you're so good at this that your revenge trade was pretty calculated. You just said, let's get back below. Everything says it's going down. Let's go down. And then you get out with the loss of momentum. And I love that you think that was revenge trading because you showed them. You got your money back. And that's got to feel good, right? And Morgan, you took that one too. Why wouldn't you? But remember earlier, Jen, when I said when you take 3 or 4 losers, most people skip the right trade. They talk themselves out of it. You didn't let yourself talk yourself out of it because you understand your rules. Jen, if you hadn't taken this loser, you still would have taken that winner. I've seen your charts. I know your plan. It fits. Pete, it fits. Morgan, you know that it fits. The fact that it was preceded with a loser doesn't make it the wrong trade. And you're absolutely right, Jen. It is funny how the mind works when you're emotionally trading. But this is where repetition begins to pay off, right? So, quick little story. When I used to road race motorcycles, guys, back in a different life, There were two classes. There was a novice class and there was an expert class. And the thing is the experts and novices really ran pretty close to the same lap times in a lot of instances. So the experts and the novices both took this one. Oh, Jen, look how low you jumped in. I didn't notice that. But that would have been the right trade anyway. It just didn't work. You held too long. That was your exit. 4 ticks. I just noticed that. You could have lost 2 or 3 ticks, 4 ticks. Okay, but anyway. So this happens, right? The novice sits and stews over it and pines about it and whines about it and writes things on their charts like, these mother scratchers, I can't believe they just did it to me. And while they're busy focusing on what's already done, they miss what's next. And the difference between a novice and an expert is a novice doesn't take this trade because they're worried about what they can't fix. An expert says, this just happened, whatever, there's still work to get done. And it was absolutely true. When I was a novice, I could almost crash, and crashing is a part of racing the same way losing is a part of winning. Look at that termination condition. And it would take me 4 or 5 laps to recover. And then once I got my repetition down, guys, I had times where I did crash and save it off of my knee and end up not going in the dirt and still won races, and it was pretty cool. So what do we see right now? Smalls are above the large. The large are angled up. We're coming from a termination. Did anyone notice that giant red fib in the way? Right there? You don't have the one-to-ones? So Jen, right click, and reload historical data. I'll do the same thing. Oh, well, we have different charts then. I was like 11 what? Yeah, okay, yeah, we have different charts. We have completely different markets. No, that's okay. And it's funny because I put it in the beginning of the room. If our charts don't match, that could be why. And I completely forgot that we rolled. I've been doing so much stuff. So I have a termination, right? Triggers are rolling. I'm into another termination condition. This is crude oil, right? Muser, or was it Haji? It was Haji. Haji, let's see if there was a market flow opportunity. So I'm going to build my market flow chart real quick. And we'll see if there was one of those HVA trades that we talk about. Almost there. There was. So here was my termination. There was the line in the sand from the solid bottom. There was your entry right at 74. Isn't that cool? That was it. But it had to be the termination first. That's what sets up the trade. So that green line, and check it out, before the termination, that green line meant precisely squat. No termination, who cares? Termination, holy crap, that's powerful. Renko charts lead the way always. I like that, Pete. The difference between an amateur trader and a professional trader is an amateur sees an opportunity, they think about it. A professional trader seizes the opportunity. You don't have to think about it because it's second nature. And that's an awesome trade. That's pretty cool. I'm glad that's set up, Haji, because that really goes with the idea that the Renko charts have to lead the way. Charts didn't save your ass, Rob. Your ability to read them did. Don't confuse the two. Own your successes and own your failures, guys. 100% accountability. Your charts are just a tool. That's like saying guns kill people, right? Not trying to start a debate. But not one gun in my home has ever pulled the trigger on its own. Not one pencil in my house has ever written a nasty message to someone if it wasn't in somebody's hand. So remember, these are just tools, guys. You don't own nothing. I've got the coolest wife ever, Ron. I think her gifts have been like 3 or 4 guns. And she's always like, ooh, I need one of those. I need one of those. I'm like, you are the most wonderful woman ever. Termination, right? Split triggers. Marlon, did you learn something? I hope so. And it's day 1. Man, it gets better every day. It really does. Keep coming back. If you're here tomorrow and you need help taking pictures so you can post in the room, let me know. We'll do a full tutorial over it. So glad to have you with us. Have a great afternoon, man. All right, Tracy. Should the diversion on the large chart stop entry? Momentum was good. Separation was good. Above the previous area. So the first answer, Tracy, is absolutely. Absolutely, positively, 100%, without question. Let's bring up the Trader's Guide. And we did that whole big lesson on it earlier, remember? When we talked about a pivot with the loss of momentum and how when price comes back and reaches that pivot, where's termination conditions? Direction, termination. That's one of those key areas that can ruin the good time. And the recipe never changes. When price reaches that area and the triggers remain below, you're trading directly into a termination condition. This area has the potential to stop the market. What did it do? Great entry if it wasn't there. Awesome stop placement if it wasn't there. Where was it? That's okay. Where was it? What time was that? Mine doesn't look like yours. Am I looking at the right chart? That's the ES. December 58.97 coming through 58.95. That had to be back here. There it is right there. Okay. And I've got a couple extra fibs too. But check this out, Tracy. You're going to love this. I don't know if that's the right one, is it? I don't know. Let's do this. Let's look at your picture. 1021. Okay, thank you. Central, Eastern. Oh, right there. Okay. So let's break it down. Let's circle the tail real quick. So it's 11:21 my time. Remember when I said that there would be a point where you make decisions on your ability to read a chart? I'm going to do this. I love this picture, guys. So watch this. Tracy knows. I'm assuming Tracy knows because you're showing a pretty solid run here. These are the 3 rules, right? These are the 3 advantages that make it high probability trend trade. Momentum, clear path, and an entry area. Tracy, you had the best momentum on both charts. Everything about your chart said screaming to the upside. Let's double check. Without a doubt. Screaming to the upside. Where's my thing here? Here we go. What you didn't have, Tracy, was a clear path. But what you did have, Tracy, is the perfect entry inside of triggers with clearly defined risk. So you had 66% of the advantages in play. You had the strongest triggers ever that lets you know that the market's likely to continue up, and you had a clearly defined entry area per the rules that lets you know exactly what your risk was getting into it. The one thing you didn't have was a clear path. So the only thing that I have to say about your trade, Tracy, is if I know I'm without a clear path, I may have to manage aggressively. This would be a medium probability trade because the issue exists, which means that if I take this trade, my first target is probably going to be that problem area, right? If not, and you had it at 100, which is even better. And if something changes, right, like I get a lower pivot with divergence or something goes wonky, I'm probably going to manage out of it. Tracy, I love everything about this trade. You had the momentum, you had the perfect entry, and you knew exactly what you were up against getting into it. You knew exactly where trouble was. And hell, you were willing to get paid before it. And because you waited for the perfect entry, you had room to get to your trouble spot. Tracy, high five. Isn't it funny when you think you got lucky and it turns out you're just a badass? Does that all make sense though? When you know what you're up against, guys, you know whether or not it's a just hold for the duration or manage aggressively. I love everything about the trade, Tracy. Nicely done. Rob, you moved your stop, then canceled it because you were upside down 100 and saw 3 divergences, and the new move down was over. Got out, managed, closed, kept your $100 and 70 more. Felt good reading charts instead of just taking a loss. I love that, Rob. I have absolutely no idea what you're talking about, but I absolutely love that your chart reading created success. And now, Tracy, I don't really have the momentum, right? But I do have the clear path. And I do kind of have the entry area. Another one of those medium probability scenarios. When you talk about things in terms of advantages, it makes it pretty easy, guys. It really does. It makes it pretty easy to know whether or not you should be pulling the trigger on that trade. Let me go back to this picture, since there's no other pictures in the room. So let me give you the next scenario here. So Tracy, let's say you had the momentum, right? You knew you didn't have the clear path. Now we're just playing hypotheticals. And let's say you didn't have any areas inside of favorable large triggers. Would it be wise to give up 2/3 of my advantages and hope stuff works out? Do you guys see how, speaking in terms of advantages, you start to define things are going bad. I'm losing these things that I typically use to produce winners. And I think one of the biggest questions that people have to ask themselves is, how much am I willing to give away and still risk my money? Awesome. Ron, there's nothing to do, so instead of fabricating, you're going to go ride the motorcycle. Be safe. Have fun. Smile big. Wear a helmet. We'll see you tomorrow, man. Been a pretty outstanding class today, guys. I've enjoyed it. How are we doing new guys? Sid, you said seeing a termination is the key for you. Understanding, I mean, look at that to the tick, right? There's a couple things that people that have been traders before bring to me, and they're like, you know what, Mark? I'm already successful outside of Nexgen. I really am. I'm doing great things. I'm a pretty smart guy. And what they do is they go, there's two things that tend to pay the hugest dividends, the biggest dividends for new users. or for people that are experienced but don't have Nexgen. The first one are Fibonacci levels. Just having that understanding of where things could potentially happen, right? Maybe it helps you capture a little extra profits. Maybe it keeps you from taking the last trade. The other thing that people always bring to me, and they're like, Mark, this is my favorite part. Let me see if I can go back to the picture. Oops. Understanding where the market shouldn't go. Being able to have intelligent stops that aren't $400, $500, $600, $700. And those are the two biggest things that people that are already confident traders that are just looking to be a little bit better bring to the table. So Sid, if you're one of those people, right? I don't know if you're already trading. I never tell you guys replace what you're doing, right? How presumptuous and pompous is that? I say let's take what you're doing and make it better. Let's see if we can find a way to make it better. Most of the time we can, not always, but most of the time we can. So as we wind down today, since I've got so many new people in here, I want to do just a little repeat. And this is something that I'm very passionate about, guys. There is a path to getting to where you want to be with the Nexgen software. And it's the feedback, it's the conversation, it's posting the pictures, it's writing stuff on charts, because every time you write on a chart and you look at that picture, you create a connection. Clear divergence termination. I love it. Sid, get on simulator. Screw it up. 100 times. Screw it up. Who cares? Post it in the room. We'll talk about all of it. I've been reading charts for a long time, and I've been with Nexgen software for a pretty long time here. And the cool thing is that if you just show me what you're doing, we'll talk through everything, I promise. So post in the room, post in the room, post in the room, post in the room. Hey, Mark, this isn't a trade. My rules aren't met. Post it in the room. Hey, Mark, we hit this big line. Is that a termination condition? Post it in the room. I'll answer all your questions. I love answering your questions. I've got crazy low self-esteem. So when I get to be smart about something, it just, pumps me up. And guys, use this sheet. Take those pictures and go back and study them. Take those pictures and go back and study them. It's not the trades that are going to make you great at what you do. It's the recognition. You'll have to get to bank. Tell them you're about to fill it up. So guys, that's the class. It's the same class every day. The class is let's talk about advantage. Let's learn the rules. The class is you posting in the room. Let's have some conversations and keeping it simple as a brand new user. Absolutely. Tracy, you're going to mess it up. You know what my wife's favorite word is in the whole English language? In the whole English language, her favorite word is grace. My wife is a phenomenal human being. Give yourself some grace if you're brand new. Don't put the pressure on yourself to know everything right in the beginning, guys. Be willing. Post everything so you get money to put in the bank for trading. I like it. Hey Sid, do you know about prop firms? I'm not sure who you're working with. Nexgen's going to have one open in the next month or two. We've got to get some programming stuff done, but this one happens to be, you're with Art? Big Daddy. I love it. So one of the things that you can do, Sid, there's no reason to risk your own money anymore. I firmly believe that. You can control $75, $100, $150, $50,000 of somebody else's money if you prove to them, that you can make this before you lose this. And it's different for every size account, but you pay them a thing. Yeah, man, I think that's the best way to do it, Tracy. Kiss 1,000 girls until you realize which girl you like kissing the best. Don't tell my wife I said that. But Sid, the days of needing your own 20 grand to trade, Cindy, are gone. And these guys run specials all the time. You can control 50 grand usually through them when they're running a special for 50 bucks a month. 39, Tracy? That's awesome. I am almost 28 into mine. I've been kissing the same girl for 28 years. But this is kind of cool, Sid, because, and talk to Mark about it. He'll tell you about it. But the idea is that you learn your plan, you practice your plan, you get comfortable, consistent with your plan, and then you test your plan on one of these. And I can tell you, you're going to fail a couple times. Most people do when it goes live. That's okay. So you go back to sim and you practice your plan a little more, and then you try it again. But there's stuff like that available. And Nexgen is opening their own funding company, guys. And it's going to be a funding company that's not just based on, hey, we'll fund you if you're good. It's a funding company that says, hey, guess what? We got 28 years of teaching people to be day traders. We got 28 years of finding success and creating successful day traders. And the goal isn't going to be to blow you guys out 1,000 times, but rather the goal is going to be to help you find the success that you want. Because when you are successful, these funding companies are successful. It's kind of a cool deal. It's a win-win. So that's coming up. So Sid, talk to Mark about it. And I think what you'll find is you can take the trading money, get your software, and just keep getting good at it. And you're stuck with me if you do. So good stuff. All right, guys, that's it for me today. Look at that. Rule 2 to rule 2 to rule 2 to rule 2. Don't forget the fake out breakout if it happens.